And it is International Women's Day, and we have a lineup of interviews with leading female political and business figures throughout the day. Welcome back to the program, everybody. Let's have a look at the futures and where we are positioned ahead of the European equity market session. Just coming up to 15 seconds to go until the start of the European equity trading day. And you can see the European equity market futures are pointing higher, so up 0.7% on Euro Stoxx 50 futures. As we've been discussing, though, with Mark in the last hour, we don't have very high tech representation here in Europe, so perhaps we respond to different stimulus, and we do see that the tech sector is still under pressure when it comes to NASDAQ futures. So we'll expect that theme to run from Asia into the US, maybe sidestepping London just a little bit, sidestepping the European session, I should say, more broadly. In terms of where these European equity markets open then, this is what we have for you at the start of trade. So the FTSE 100, first out of the gates, up by 0.6%. We might be looking for the double-edged sword that is higher oil prices to have something of an impact on the London market this morning. That, by which I mean on oil price, on oil majors, but also on airlines. So we see an oil price of $70.30 on Brent, $70.30 a barrel on Brent. That is up 1.4% after the story that we cited in our headlines around the attack on an installation in Saudi Arabia. So that is certainly something we are watching for. So the London market going higher, up by 0.7%. The CAC 40 over in Paris up by 0.7%. The IBEX up by 0.8%. And interesting to see that actually aviation stocks this morning are moving higher, so not responding negatively to the higher oil price, but responding positively to the fiscal stimulus, to the catch-up trade that we need to make for recovery stocks and the recovery sector of which they are a part here in Europe versus what we saw in the US on Friday. So European equity markets opening to the upside. This as the US President Joe Biden is nearing a big win on his $1.9 trillion stimulus plan. The second biggest in the country's history, of course. It passed the Senate on a party line vote this weekend and will now return to the House. Joining us now with analysis, Raffaella Tenconi, ADA Economics Chief Economist and Founder. Raffaella, good to speak to you. So give us your thoughts on just how significant this $1.9 trillion package is. I have to say, a lot of voices, whilst this was being discussed and debated, a lot of voices were saying, well, 1.9 won't stay 1.9, but it's actually managed to survive the process in the US fairly unscathed. What do you take away from that?
Hi, good morning, everyone, and happy Women's Day. Well, I think it is definitely a success that he managed to bring home the full amount. But then again, the election results were strongly in his favor. And more importantly, the global situation and the COVID situation is very dire. So I think it was a combination of certainly a lot of skill and some luck. But definitely, definitely came at the right time.
Came at the right time. How much stimulus is too much stimulus, Raffaella, at this point, when we see the jobs story in the US developing as it is, economists sort of, trying to outdo each other with upgrades to the US economy at this point, a recovery widely anticipated, of course. How much stimulus should the US economy need and absorb at this point?
I think at this stage, it's not too much in the sense that you have to understand that the labor market gains are heavily polarized, as is the business sector. And this kind of camouflages a bit the average. So when you look, for example, at the labor gains, they're all skewed into higher education and actually lower education jobs still heavily suffering and below pre-COVID. The same goes for earnings. So to some extent, yes, the recovery is robust, globally, I think we do need a robust recovery. So at this stage, I don't think it's too much stimulus. But what you will likely see is that the combination of all of this monetary and fiscal stimulus is covering the headwinds that are going to come from higher fuel prices, because inflation is going to really jump everywhere, including the US. Normally, actually, the impact of higher transport costs almost as strong on retail spending as is employment gains. So normally the two would offset each other, but this time it's going to be a much longer lag. I think it will become too much going forward if we don't update our view on how fiscal and monetary policies should adjust to digitalization. So far it's good. Going forward, it will start getting dicey.
Okay, and I wonder what does the rise in bond yields, does a rising bond yield environment make it increasingly dicey, in your words, Rafaela? What do you make of that recent rise in bond yields? It seems that markets are positioning for more of the same. We see that net speculative treasury short positions saw a record increase last week, as if the market is anticipating more of this to come. How do you interpret that higher yield environment?
Well, if we take a step back and we look at our fair value models, we think that the 10-year is already pretty much above what real conditions would justify it. So the market, in a long-term perspective, is discounting tapering already this year and rate hikes, which I think it's clear that is not going to happen. So to some extent, this is overdone. But you have to consider that there is a massive amount of supply coming in. There is inflation coming through. And the central banks are not really stepping in with additional liquidity immediately. So I think you will see more yields rise in the very near term. I think you will see eventually the Fed stepping in and yields coming back in the summertime. But I think for the time being, we are in higher yields environment. The pass-through to the economy is definitely happening. I mean, if you look at the 30-year mortgage rates in the US, they're up 37 basis points from the low in January. So that normally is actually a very big change. But as I said, with all of this monetary and fiscal effect, you don't see the impact on consumers yet.
Okay. Rafaela, thank you for your thoughts. Stay with us. Rafaela Tenconi, ADA Economics Chief Economist and Founder. She stays with us on the program. Coming up here on the European Market Open, Brent jumps above $70 a barrel after Saudi Arabia said one of the most protected oil facilities in the world came under missile attack. Limited damage, but it did push oil prices higher. The full details next. This is Bloomberg.
Today on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Cathie Wood. 5 p.m. Wall Street time on Bloomberg Television.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal time for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 9 minutes into Europe's trading session, and we are positive, but how much is this out of step with what's going on globally? The Asian market session dragged down to some extent by Chinese technology, and Nasdaq 100 futures for March extending losses down by 2%. So tech sell-off outside Europe, certainly one of our key themes. Let's take a look at some of the movers that are moving markets this morning here in Europe. And for that, here's Danny Berger. Danny?
And at Pearson, one of the biggest movers to the downside, this is the education company. They missed their earnings, also resetting, looking at some strategic options for some of their businesses, including their local education business, but still shares dropping more than 3% on that revamp. We should also keep an eye on the energy sector, one of the best performing sectors in the stock 600. That's as the price of oil, of course, rises above $70 a barrel after that attack on a key Saudi oil site. Finally, the best performing stock today, and this is quite the turnaround from Friday, Carnival, the cruise line operator, up more than 6%. Friday had fallen more than 11%, but perhaps that was overdone. It's that reopening trade coming back. Now, speaking of things coming back, I want to take a quick look on U.S. macro markets. We're looking at the U.S. 10-year yield moving higher yet again. Nowhere near was on Friday at 1.6%, but still, you can see that angst spilling out into other assets. You have the Bloomberg dollar spot, for example, moving higher today as foreign buyers moving into the U.S. with those higher yields. And of course, that higher inflationary, higher yield picture taking a hit to the NASDAQ futures this morning, which are down nearly 2%, Anna.
Danny, thanks very much. Our markets reporter Danny Berger with the latest on those stocks on the move, and indeed some of the big picture stuff around what's going on in the US and in broad markets. And in terms of the broad markets that we're responding to here in Europe, the oil price is certainly part of the story. Brent has jumped above $70 a barrel after Saudi Arabia said that one of its most protected oil facilities in the world came under missile attack. Iran-backed Houthi fighters in Yemen claimed responsibility for the strikes on the Saudi kingdom. Joining us now for more is Helen Robertson from our oil team. Helen, tell us more about the nature of this attack and what the effect has been.
Hi there. Yes, I mean, obviously, as you mentioned, so what we learned yesterday was that Saudi Arabia said that the world's most protected oil infrastructure, well, some of it came under missile and drone attack. Now, as you've mentioned, the result of that was that crude, international benchmark Brent crude, actually rose. It topped $71 a barrel earlier. It's actually eased back slightly now, but still trading at the highest since January 2020. And obviously that's against the backdrop of what happened last week with the OPEC Plus coalition. Effectively, they gave prices inadvertently a bit of a boost by deciding to roll over their production curbs agreements. Now, in terms of the incident in Saudi Arabia, from what we understand, production has not actually been affected. So it's not like the situation that we had in September 2019, where a huge amount of Saudi output was knocked out by attacks on the kingdom's energy infrastructure. But obviously, futures have reacted to this. So I guess, it's a geopolitical risk thing. And also it's against the backdrop of a series of other attacks that Houthi rebels claimed responsibility for on Saudi Arabia. So this is all contributing to the geopolitical risk.
Yeah, the geopolitical risk sending us higher, even though, as you say, Helen, there hasn't been any disruption to production, to supply. So does it seem as if this gain is either going to be short-lived or actually more to do with the OPEC Plus decision of last week?
The OPEC Plus decision last week has certainly been very supportive of prices. I mean, obviously, we saw, as soon as the news was announced, we saw futures shoot up. I mean, obviously, there are other supportive factors as well, such as Chinese export data, for example, and then U.S. stimulus measures from President Joe Biden. So all of those things would indicate that, demand is beginning to rise. It's beginning to recover from the impact, obviously, of lockdowns, curbing consumption, and the catastrophic impact that the pandemic obviously has had on it. So there are several factors at play here. Whether this current price rise will be short-lived, obviously it's difficult to say. But as I said, obviously what we do know is that the market is currently well supplied. OPEC Plus, as we know, they are reining in. They have the potential to unleash. Well, there's about 7 million barrels a day of supply that's currently off the market, and that they've agreed, not to release in order to sort of, rebalance and keep prices supported. So we're certainly not short of oil.
Okay, thanks very much, Helen Robertson from our oil team. Thanks very much for bringing us your thoughts. Raffaella Tenconi, ADA Economics Chief Economist and Founder, is still with us. Raffaella, we see oil prices higher, but as we were hearing from Helen, yes, partly to do with the Saudi attack, but oil prices were already well supported by that decision last week from OPEC Plus. Would you expect to see higher still prices from here? And how does that weigh on the European recovery story as it tries to get into gear?
Well, I think oil prices are getting a bit too high, but at the same time, as long as you're in a cycle where QE is still increasing at some point this year, there is certainly further upside. For the European, the labor market's gain have lagged the momentum in the US, so I think it is a much bigger downside risk to the European recovery, especially because vaccines are being deployed very slowly, and because there are some countries that are still tightening restrictions actually as we speak. So in general, I think it's a much bigger downside risk for the European recovery than it is for the US.
Yeah, how would you quantify that, Raffaella? Not the oil impact, but the underperformance of the European economy that you expect to see here. What kind of lag do we have between Europe and the US in terms of the recovery this year?
Well, our GDP forecast for the Eurozone this year it can be up to 1% lower than consensus. But what I'm beginning to observe is that in Europe there is an ideological shift, a very important one that is taking place, which is fiscal policy is going to be looser and more pro-consumption than what we have ever seen in the last 10 or 15 years, and probably more than what everybody has priced into their forecasts. You see it very clearly in Germany, which, by the way, had already suspended their debt brake a while ago, and it's now recently announcing further fiscal stimulus. You will see it in Italy because the only way Draghi can hang on to power is essentially by giving away whatever is needed and wanted. And in general, the fact that the vaccine story is underperforming expectations, I think it will push everyone to just allow for longer wage support measures. So to some extent, I am bearish on the Eurozone recovery, but I have to acknowledge that we are likely to see more stimulus coming through on top of additional QE by the ECB.
Okay, so maybe more stimulus on the fiscal side and more QE then from the ECB. Back to the commodities side of things, Raffaella, and we talk a lot about whether we are seeing a commodity super cycle here. And I wonder if in doing that we miss some of the detail. Clearly there's plenty to talk about, and there's plenty of, there's the cycle, there's the cyclicality of it, but there's also structural change and digitization, and that's affecting some commodities more than others. What are your thoughts on whether we're seeing this super cycle?
Yes, absolutely. Actually, I think you're raising a critical story here, because I think we don't fully appreciate how strong is digitalization as a shift and how big it is going to be a headwind for real GDP potential, particularly in Europe. Because most people think about digitalization as an anti-inflationary effect, because we all see the divergence on the labor market, right? The lagging behind of lower educated workers. But that is only one fraction of the problem. And actually, you will see the fiscal stimulus coming in, because in the last 10 years, anybody that has tried to be too austere did not really win elections. So there is definitely a change in thinking there. But on top of that, digitalization also means enormous investment to diffuse big data and to really optimize it. And that will be a very potent trend upward cost effect. And also digitalization means a change in many industries, a shift towards oligopolistic-like behavior. And that for inflation means that prices will be stickier and more disconnected from the labor market. And so that creates an enormous challenge actually for central banks in the long run. So overall, in my view, I think it's very, very important to focus on the lags. Right now, we are certainly in the near term in an inflationary environment, but we will pay some effect in terms of demand probably in the second half of the year. But there is no question in my mind that unless we change the recipes that we produce for fiscal and monetary policy, we are structurally seeing a massive reflation, for the next decade. And that will also come with significant credit risks to any country that is not going to embrace digitalization properly.
Okay. Yeah, really interesting. Thanks very much, Raffaella. Good to speak to you. Raffaella Tenconi, ADA Economics Chief Economist and Founder. Raffaella will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. 20 minutes into our European trading session and European markets on the front foot. Technology underperforms just a little. We'll talk about IPOs next. Takeaway profits, in fact. We talk Deliveroo's London listing. This is Bloomberg.
Today on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Cathie Wood. 5 p.m. Wall Street time on Bloomberg Television.
Nuestro país, igual que los demás países del mundo, no están preparados para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability have our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
I think that SPACs are very much here to stay.
We're viewing this as is really an alternative, a parallel to what I consider an old method of going public.
Clearly, there's a lot of hype.
SPACs offer a fast track to an IPO, and SPACs can be a friend. On the threat side, they are also competition for deal flow.
Whenever you see the kind of extreme boom that we've seen in the U.S., there's clearly going to be some froth that needs to come back down to the ground.
They are a useful tool in the capital markets toolkit.
If it's a good sponsor, if it's a fair sponsor deal, if it's got good pipe investors, if you really do due diligence in the acquisition, these things can make sense.
Using the language of inequality, it evens the playing field. It democratizes access to high-growth companies.
Some of the guests we've been speaking to there on Bloomberg TV with their views on the rise in the use of SPACs, special purpose acquisition companies, lest we forget. Now, sticking with new listings, ways of coming to market, ability to raise money, food delivery company Deliveroo has kicked off an IPO in London, putting the UK market on track for its best ever first quarter. It comes as the UK proposes new rules to attract listings to the city. Joining us now to discuss is Bloomberg's Danny Berger. And Danny, I know this is something we've been discussing. How much does Deliveroo's listing have to do with the new rules that are being just proposed for the UK at this point?
It's definitely not a coincidence, Anna. The fact that Deliveroo has come now, they are hoping to take advantage of these new rules. But as you say, they haven't been put in place yet. So it's likely when Deliveroo does list, if it's happening soon, they're not going to exactly be able to take advantage of them, at least right away. Now, the difference is without these rules, stocks can still list in London, but they don't get a premium listing. And without that premium listing, it means you're not going to be included in some of the main FTSE gauges. So you miss out on perhaps some of that passive money, for example. So this is something you really want. But by introducing these rules, which Rishi Sunak says that he wants to be pushed through quickly, that the FCA is now looking at, it could really help some of these UK benchmarks. If you look at the performance in white, there is the FTSE 350 Tech. It's lagged all the other regions without having some of these companies included in them because of these rules, Anna.
And we heard from the LSE, they were excited about the rules as well, wanted to see them come through quickly. But briefly, have we seen any pushback against them, Danny?
We definitely have. It's a big era for ESG, and this falls on the governance portion. By allowing dual-class shares where one share gets more voting rights than the other, it is a governance issue. It's giving more power to the founders. So we have heard people voice concerns about this, Anna.
Okay, Danny, thanks very much. Bloomberg's Danny Berger with the latest on the listings set to come to London and the listing regime that they might find themselves regulated by. Thanks very much to Danny for analysis. Coming up on the program, we focus in on the US as the Senate passes President Biden's $1.9 trillion stimulus bill. Interesting to see that markets are focusing, though, on the run-up we've seen in tech stocks and selling of tech stocks and the higher yield environment. We're now around 1.59% on the US 10-year yield. Markets focus on that story, on the squeeze in financial conditions that provides, rather than the stimulus bill. We'll get analysis. This is Bloomberg.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at.
I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. 30 minutes into our European session. European equity markets to the upside. How long does that last for, though, when you look at what's happening stateside? A lot of difference, of course, between the composition, sector-wise, of what we have here in Europe and the US. Let's have a look at the GRI, and you can see where we are on the sector story for European equity markets. And we don't have such high-tech representation, of course, but we do see technology as one of the three sectors that is under pressure, down 0.1%. That was true in Asia. That looks as if it'll be true in the US session as well, with NASDAQ futures down as much as 2% earlier on. We also see some of those staples selling off in Europe. So utilities, the bond proxies, utilities, personal consumer, drugs and grocery stores, all to the downside. Instead, we're playing the reflation trade, we're playing the steeper yield curve trade and the higher bond yield trade here in Europe. We see banks moving to the upside. That really a feature of that trade, just as the US 10-year yield ticks above 1.6% once again. Let's focus back on the US and the inflation and stimulus stories. President Joe Biden is nearing a big win on his $1.9 trillion stimulus plan, the second biggest in US history. It passed the Senate on a party line vote this weekend and will now return to the House. Joining us now is Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. Thushka, good morning to you. So how significant is this $1.9 trillion? And have you had to upgrade your forecasts because of it? Because in the initial phases of talking about this stimulus deal, a lot of people were assuming that it would not remain 1.9, and yet it has.
Yeah, good morning. Thanks for having me on today, Anna. As you say, this is larger than our initial forecasts. I'd say over the last month, we have been upgrading our US growth forecasts, partly based on this bigger stimulus plan. 1.9 trillion, over 8% of GDP. We don't expect it all to be filtering into 2021 growth. But what's crucial is it's leading to above trend growth for the foreseeable future. So both this year, next year, and possibly even further. And yes, you're right to highlight that it's weighing on bond markets. But I would say the combination of the central bank sort of being more sanguine about the bond yield rise, as well as this bigger stimulus plan, is having a disproportionate impact on bond yields. So we see the stimulus plan as injecting topside risks to our positive growth outlook. It is supporting, as you say, the sectors of the equity markets that benefit from higher yields and modestly steeper yield curves. So it is supportive of our pro-risk stance. But I'd say what we're watching now is the interaction between higher bond yields and what it means for the rest of the market, whether that's equities, currency, and volatility.
Yeah, because Thushka, you say you're expecting bond yields to rise, but you still see them as facilitating the recovery. I wonder how you strike that balance for stock markets. Is it all to do with the speed of the rise in bond yields? And if they rise but just very slowly, then that doesn't spook equity investors. What are the limits around that assumption?
Yeah, as you say, financial conditions are crucial here. Bond yields are part of that equation. And what we're looking at is those real 10-year yields still remaining very negative, at a minus 65 basis points for a 10-year US real yield. That's extremely accommodative given our growth outlook, given our views for the global economy over the next 12 months. So we'd characterize the rise in yields as a function of improving growth and the modest, the sanguine outlook from the central bank. But financial conditions are crucial. And so it's the bond yield move, it's what it does to volatility and mortgage spreads. I think all of these are crucial ingredients. But when we look at what's a neutral sort of real rate in the US over the next few years, we still see market pricing as being accommodative. What would concern us is, as you say, a faster another sort of big jump or disorderly move in the bond market that's not met with central banks sort of soothing or sort of intervention. And I think that's a definite risk over the next few months, especially as we get the strong data out of the US. But our base case is that the higher bond yields are a function of the growth outlook. And as equity markets see that improving growth picture on reopening in Q2 data, that will provide comfort for risk markets.
Okay, so it's the size and also whether it's disorderly in nature that matters then, Thushka. Let me ask you about equity markets geographically, where you choose to put the money, because I notice in your notes you talk about tilting towards Europe, and maybe Europe is behind in terms of the recovery story, and also Japan. And is this about the structurally different markets that you have in Japan and Europe versus the US, the sort of underrepresentation in the former two in technology versus the US?
Yeah, so we do have a pro-risk bias and a sort of a tilt towards more cyclical markets, whether that's Europe, Japan, and even US small cap, where I think it has that twin benefit of US fiscal stimulus as well as the reopening sort of environment that we are going to be in. But why other markets relative to US large cap? I think you're right. It is sector composition being a key ingredient there. That cyclical gearing we have in Europe and Japan supports those markets. But what I would say is that, this isn't a view against the US large cap market. This is just a view on the rest of the world improving as the global economy improves. And I know you've been focusing on the downdraft we've seen in technology. We see cyclical reasons for catch up in these other markets, but from a secular basis, we still see very strong, robust earnings in technology. It's just not a theme today that we think will be driving that upside for risk markets.
Thushka, thanks very much for your time. Thank you for speaking to us this Monday morning. Thushka Maharaj, JP Morgan Asset Management, Global Multi-Asset Strategist. Coming up on the program, we speak to Odile Renaud-Bassot, the president of the European Bank for Reconstruction and Development. The EBRD president joins us next. We'll discuss the inequality of vaccine access around the world and financing projects and investments to fuel the post-pandemic recovery. Maria brings us that conversation from Brussels next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective
They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European Market Open. Just coming up to 40 minutes into the European equity trading session, and you can see that we've got gains for these European equity markets. It does vary by sector, though. Some of the banking stocks doing pretty well. Some of the bond proxies selling off today. So we see Stocks Europe 600 up by 0.6%, and that steepness in the yield curve, the higher yield environment. We're now at 1.6 on the US 10-year. That is certainly in focus. It's also in focus when it comes to tech valuations, the valuation of tech stocks. You can see NASDAQ futures under pressure. We've been down as low as 2% to the downside on NASDAQ futures, but we bring you this chart because we are not far from those session lows on NASDAQ futures right now. So as the global vaccine rollout picks up steam, it's highlighting the issue of unequal access that countries and certain groups of people are facing around the world. Equitable access is key to economies reopening and the world moving out of the pandemic. But even before the vaccines came into play, the impact of the coronavirus was being felt differently, with the most vulnerable being hit hardest. The European Bank for Reconstruction and Development has set aside 21 billion euros to finance projects and businesses in Eastern Europe and in Central Europe. For more on this, joining us now is our reporter in Brussels, Maria Tadeo, and she is joined by a guest from the EBRD. Maria.
Yes, Anna, good morning. And it's 21 billion euros in loans, equities, and other projects to help combat the coronavirus. It's also worth putting out that the European Bank for Reconstruction and Development has a very explicit green mandate. And in 2017, they already hit their target of 40% green funding. And we're now joined by its president, its first female president, I should point, Odile Renaud-Bassot. And Odile, I know you care a lot about equal access and equality, and that's essentially the goal of the institution that you lead. But how much do you worry that coronavirus is going to set everyone back on that quest for equality when it comes to investment?
Thank you very much. I'm happy to be with you this morning. So indeed, I mean, first of all, the crisis, the COVID crisis, have not had the same impact on all the economies. Countries which depend much more on tourism, for example, have been hardly hit, while as well as countries depending on oil and gas, because the prices have been down during the crisis. So, I mean, the impact of the COVID crisis on the different economies is quite different. And what we see also is that the impact of the second wave of the crisis is very different. Some countries, for example, in Eastern Europe or in the Balkans, which have resisted very phase now are small them quite deeply. The issue is how, I mean, because we know the access to vaccine will be very important in the recovery and in the rapidity of the recovery. And what is clear is that countries do not have exactly the same access. Some countries, for example, the members of the EU benefit from the coverage global access to common access to the vaccine. Countries which are not members of the EU benefit from COVAX system, which is a very solid and ambitious program, but which also foresee at that stage a coverage of population of 20% at the end of 2021, while EU members, for example, EU countries should have access to vaccine coverage covering several times their own population. So we can see that there is a gap there, and that ensuring equal access over time will be extremely important to ensure a sustained recovery all over the world.
Right, and Odile, you know very much on this side of the channel in continental Europe, there's this whole conversation as to whether or not perhaps the European Union is being nationalistic when it comes to the vaccines. Do you see that happening? And I guess the question here is, should Europe be doing more when it comes to securing vaccines for other countries that may need it too?
I think Europe is participating actively to COVAX, and European countries have been at the origin of the COVAX system, which aims to ensure equal access to vaccine to all countries across the world. Of course, there is tension, and you can see that in European countries, between securing access to their population and helping other countries to access vaccine. I hope that the increasing of the level of production of vaccine will shortly facilitate this dealing with these different objectives. But of course, I mean, this is currently because there is a shortage of vaccine and the production is increasing but step by step and probably not quickly enough to cover all the needs. There is this tension and every country has to manage that. But I think that what is very important for all countries is to understand that as long as the vaccine will not cover all places in the world, we will not get out of the risk of the new pandemic and so forth because of the traveling, because of the globalization.
Right.
I mean, the solution will need to be global.
Right.
And not country-based.
And as part of that global solution, you know, I wonder, you're putting billions of euros out there to work. Do you see or foresee a situation in which you, as a European Bank for Reconstruction and Development, would put money directly to COVAX and pay for some of those vaccines? Is that something you would contemplate?
The EBRD is not financing directly the buying of vaccine and is not directly financing COVAX because we are a bank which is focusing more on private sector development, investing in businesses and so forth. Mm-hmm. What we foresee over time is a possibility, for example, to finance the development of vaccine production or healthcare production goods in the countries in which we intervene. What we've done in the first month of the pandemic, for example, is to support also investment in public infrastructure, including in health sector, in order to facilitate access to healthcare in some countries where the situation was very difficult. But our key focus now is to support the recovery because, I mean, the pandemic has had a huge impact on the economic situation. Almost all countries in which we intervene have had a recession in 2020. We foresee a rebound in 21, but our key objective is really to support as much as we can this rebound so as to ensure also that the unequal impact of the COVID on population, and in particular, I'm thinking today because we are at the Women's Day, the COVID crisis in our countries have had a very strong impact on women and probably more than on men because women are working more in sectors which have been affected by the pandemic and have been more affected also by closure in schools and loss of job. So what we have to do really is to help the countries to build back better and to address these inequalities, as well as you were mentioning at the beginning, the climate challenges.
Right, and Odile, just briefly, since we're running out of time, which regions and which projects is the bulk of your investment going to this year?
So we have as an objective to have 40% of our project financing climate, so being green, so supporting reduction of gas emission, and as well as we have an objective of 25% of project addressing inequalities, including in particular gender inequalities. And we are working in countries in Central Europe, as you mentioned, but also Central Asia, Western Balkans, and North Africa, Mediterranean countries like Morocco, Morocco, Tunisia, Egypt, Turkey. And so our objective is really to support all these countries to rebound and to have the strongest recovery possible following the shock of the pandemic crisis.
Well, Odile Arnaud-Basso, President of the European Bank for Reconstruction and Development, thank you so much for joining us on Bloomberg today to talk about, of course, a very important issue, which is equal access to vaccines for all. Thanks for your time. Anna?
Maria, thank you very much. Thanks to Odile Arnaud-Basso from the EBRD. Thanks very much. Really interesting conversation around the extent of the intervention that they can make and where they see fit to intervene at this point. Thanks, Maria, for bringing us that conversation. It is 48 minutes past 8 here in London. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Food delivery firm Deliveroo is kicking off its London IPO that could put the UK market on track for its best ever first quarter. The startup hasn't provided plans on the size of the share offering, but it was valued at more than $7 billion in its last funding round. It plans to list with a dual-class share structure that will make it ineligible for the FTSE 100 despite its expected size. A sophisticated attack on Microsoft's business email software is morphing into a global cybersecurity crisis. Microsoft is blaming a Chinese government-backed group for the hack. A senior US official tells us it's claimed at least 60,000 victims around the world. Many of them appear to be small or medium-sized businesses. One of Europe's best capitalized and top-performing banks was also just named the world's most gender-diverse firm. Norway's biggest lender, DNB, achieved the highest score in a new ranking by Equileap. Its boss attributes that success to making sure women are not disadvantaged when they have children. The best way? Provide adequate paid parental leave. That's the Bloomberg Business Flash. Anna.
Sound advice, I'm sure. Laura, thanks very much. Laura Wright here in London. Coming up on the programme today, we're asking the question on the Markets Live blog, which assets will gain most from the stimulus? We'll put that question to Laura Cooper, Bloomberg Markets Live macro strategist. Not much evidence of the fiscal stimulus in US futures right now. We'll get to that conversation next. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 53 minutes almost into our European trading session, and you can see that European equity markets move to the upside. In terms of the US futures picture, though, as we've been saying all morning, that looks a little bleaker, down by 1.9% on NASDAQ futures right now. Let's get into a markets conversation, though. I'm joined by Laura Cooper, Bloomberg Markets Live macro strategist. Laura, good to speak to you. It's interesting to think about our question of the day today in the context of what we're seeing in markets right now. Which assets are going to get a boost from the $1.9 trillion in fiscal stimulus? What kind of responses have you been getting? Because you'd be in danger of thinking, well, is this all priced in from what we're seeing in US futures?
Well, I certainly think it is the case that a lot of this is priced in. So yes, the top line, 1.9 trillion, might be a little bit higher than consensus had expected. But I think what we're seeing is some profit taking on some of those cyclical sectors today. And obviously the tech route is going to extend because the path of least resistance is for yields to climb higher. But I think really the question now is looking for instead those inflation protected yields. So we know that a lot of the stimulus euphoria has been priced in. So it's looking to those financials that provide that dividend uplift that are tilted towards the reopening trade. And then energy. Energy had an exceptional month of February, but looking at positioning, looking at valuations, there is still quite a bit of upside likely for energy. So I think it's focusing on those in terms of the post-stimulus world than it is obviously looking at tech, which is going to come under pressure because clearly the Fed has made it clear they're comfortable with rising yields, notably at the long end.
Yeah, absolutely, and that's where we've seen a lot of the gains have been in those growth sectors, Laura, in recent months. I'm just seeing a headline across the Bloomberg says China's onshore yuan erases this year's gain against the dollar, and I mentioned this because, of course, we're dealing with a higher US interest rate environment. We're dealing with a stronger dollar as well this morning, and those two sometimes go hand in hand. So I wonder if that does play negatively for other currencies and to the dollar's favor if we do see this yield now at 1.6%.
Well, that certainly is a big theme of the day, is just this dollar is dominating in terms across currencies. So we did have the USD offshore yuan pair trade above its 100-day moving average. So clearly the direction is for even more dollar strength specifically there. And even with the boost that we've had in crude oil prices overnight with Brent above $70 a barrel, we aren't seeing commodity currencies necessarily gain from those tailwinds. And I think it just captures just the strength of this yield environment with real yields continuing to climb in the US and outpacing peers. We're likely going to see more dollar strength, and yes, that does have a negative relationship with risk assets, predominantly the S&P 500. So it does look to be potentially a down day as the US trading session comes later today.
Yeah, really interesting. Laura, thanks very much. Laura Cooper, Bloomberg Markets Live macro strategist. Really interesting to see the way that the oil price is playing through markets. We've lost some of those earlier gains Laura was referencing there. That attack on Saudi Arabia pushing the oil price, the Brent price above $70 a barrel. It's retreated a little since. It's now just under $70 a barrel. And whilst that does put some upward pressure on oil majors, so Shell and BP, a little bit stronger, it is not taking the edge off the gains that we see in the travel sector. Really interesting to see Carnival, EasyJet, IAG all moving higher by more than 3% as the market focuses on some of those reopening trades rather than on the damage that a higher oil price could do. That is it for the European Market Open. Surveillance early edition, that program is up next. They'll continue to monitor the strength in the European equity markets, the sell-off in US futures. That's next. This is Bloomberg.
transparency is not a buzzword. It doesn't sound terribly exciting, but it's actually quite fundamental.
A lot of companies pursuing their first listing, they look around and they concluded that Hong Kong is a viable market.
With the pandemic, this has become more like a tsunami of debt that is facing many countries.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on Monday, the 8th of March. Happy International Women's Day. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A drone attack on the world's largest crude terminal since Brent oil briefly above $71 a barrel. Saudi Arabia says output was unaffected. Rising yields look set to sink tech stocks again. They also temper optimism over the $1.9 trillion U.S. stimulus plan, which passed the Senate this weekend. Plus, technology, finance, and government. On this International Women's Day, we bring you interviews with Facebook's Nicola Mendelsohn, Deutsche Bank's Tina Lee, and Conservative MP Gillian Keegan. Now let's go straight to the markets because Brent crude briefly surged above $71 a barrel after another attack on a Saudi Arabian facility. Well, futures jumped as much as 2.9% in London before easing slightly. The kingdom says that the Ras Tanura facility, the world's largest crude terminal, was the target, though output appeared to be unaffected after the missiles and drones were then intercepted. The assault comes during a recent escalation of hostilities in the Middle East, with Yemen's Houthi rebels launching a series of attacks against Saudi Arabia. Well, our very own Danny Berger joins us for the very latest. Danny, this came on top of already that surprise move by OPEC Plus last week not to do anything about output.
Yeah, exactly. I think that's really important background to keep in mind here because, yes, we did see oil prices jump pretty significantly. As you say, one point reaching $71. When it comes to crude, we're still at the highest since January 2020 on an intraday basis. But we already had not just inflation, where you see more demand for things like oil. As you say, OPEC surprise decision to roll over some of those production cuts. So we get to this picture where we do have oil already pretty sensitive. Now, Saudi does say that their production is still up online. That wasn't affected at all, not like we saw in September 2019. But Francine, I think the other element that this brings into the picture and that we're seeing oil move higher is now geopolitical risk. So that's just another thing to keep in mind while we're tracking the price of oil, Francine.
Thank you so much, our Danny Berger there with the very latest. And happy International Women's Day to you, Danny. Now, turning to the U.S., the Senate has passed President Biden's $1.9 trillion relief bill.
It obviously wasn't easy. It wasn't always pretty, but it was so desperately needed, urgently needed. Everything in this package is designed to relieve the suffering and to meet the most urgent needs of the nation and put us in a better position to prevail.
Now, it includes a third round of stimulus payments, $1,400 per eligible individual, $160 billion for vaccine and testing programs, and an extra $360 billion in aid for state, local, and territorial governments. Now, there's also extended supplemental unemployment benefits scheduled to run out on March 14th, $25 billion to help restaurants struggling from pandemic lockdowns and closures, and $1.25 billion for venue operators. Now, the plan is also calling for $160 billion to help schools open. It will now head to the House of Representatives before President Biden signs it into action. Well, joining us now is Nanette Hechler-Federbe, Credit Suisse International Wealth Management Chief Investment Officer and Global Head of Economics and Research. Nanette, always thank you so much for joining us. There's, I guess, a lot of concern that because the stimulus bill is less targeted than some of the furlough programs that we started in Europe, that we could see inflation, going forward. Is this still the number one thing that markets want to do, and what does it mean for value stocks?
Generally speaking, the market has for sure reacted to the two sides of better economic news, real interest rates pushing up, but also inflation expectations adjusting to the upside. So I think there is really both these aspects coming in. What it does to all those stocks that are sensitive to interest rates is obviously to depress some of their valuations and expectations. In fact, growth stocks have been more exposed here, and value stocks are still providing a little bit of buffer. So in this context of a rise in yields, those sectors that are benefiting from better perspectives with the vaccination programs in particular, and from attractive valuations of better positions.
Nanette, let me also bring you to one of the pieces that I wrote, that actually I read first thing I came in. I wish I wrote it. I only read it. Our Bloomberg opinion columnist, John Author, says value stocks have done terribly. So this is a quote by our John Authors. He basically says value stocks have done terribly for the last decade, but given how they have grown cheaper relative to others, we should expect them to do better in the future. Nanette, and this kind of goes to what you were saying, that there are stocks that haven't done so well that will flip in the future. Do you need to also start looking at travel and tourism stocks?
That's correct. I mean, value over the long term has not been able in many circumstances to do better than growth. We have to face that. But the situation that is now arising may very well be one of those instances where value actually does perform well. As far as sectors are concerned, I think that tourism and hospitality that is oriented towards leisure, towards travel, towards people actually bringing their pent-up demand into concrete expenses, which all of it is going to be helped in the U.S., for example, by the package that is increasing savings capability as well. All of that should be benefiting this sector, which is part of the value sectors at the moment. We are likely to see some of this already come through in the second quarter, when typically mobility in the northern hemisphere is increasing on a seasonal basis, but also in the second half of the year.
Will bond yields continue to rise, Nanette? And does it make you worry about valuation technology stocks?
Technology stocks are among those that have been interest rate sensitive to, so any additional interest rate increase here and bond yield increase is not going to be helpful to a sector that is already quite expensive when compared to others. So at the moment, technology stocks are unlikely to find the same type of momentum than they did during the pandemic, and especially as we are gradually emerging out of a pandemic into a more normal circumstance, other sectors are likely just to see much better catch-up potential. So if you want to take the opposite of technology stocks, a sector that benefits in particular from steepening yield curves, the financial sector should be mentioned on the equity side.
Nanette, are we going to see a lot of consolidation in the financial sector? And is that something that's further going to support maybe some of the European stock valuations for banks?
The European dynamics on the financial sector are certainly adding complexity, and in some instances, consolidation can be helpful, of course, if you are on the winner's side of it. But generally speaking, the sector is just one that is cyclical in nature. So any improvement also in Europe of the economic perspective for the next 6 to 12 months is going to be positive for that sector, coupled with also the current movement on the yield side, and in particular the steepening of yield curves.
Thank you so much, Nanette Hechler-Faderb there at Credit Suisse International Wealth Management, Chief Investment Officer and Global Head of Economics and Research. Now, smart conversations right here on Bloomberg Surveillance, the early edition. It's, of course, International Women's Day. That's why we wear a ribbon and wear pink. Well, we have an all-female lineup. Later on in the program, we'll discuss the reopening of the English schools with the UK Junior Minister, Gillian Keegan. And before then, we'll be speaking exclusively to Deutsche Bank's Chief Executive for the UK and Ireland. Up next, though, we speak to one of the most powerful women in tech, Vice President for EMEA at Facebook. Nicola Mendelsohn joins us next. If you have any questions for her, you can IB Plus TV Go if you're a Bloomberg user. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a tech antitrust hawk joins the Biden administration, while Columbia University professor Timothy Wu will advise the White House on tech. He has signaled that Joe Biden's team is preparing to square off against the industry's biggest names. Wu has been an outspoken critic of companies such as Google and Facebook. What does it mean, and what does his appointment mean for these companies' strategies? Well, joining us now is Nicola Mendelsohn. She has been Facebook's vice president for EMEA since 2013. Nicola has an extensive background in advertising. Last year, along with her colleagues at Facebook, she also published a book on practical advice for marketers by marketers, calling it Build Brilliant Brands. For the past 5 years, she's also spearheaded Facebook's efforts to address gender inequality in tech. And this year, the company committed to train 70,000 women in Europe, the Middle East, and Africa as part of She Means Business program. So, Nicola, thank you so much for joining us today. When you look at International Women's Day and the fact that actually, I guess, the gender gap has further increased because of COVID-19, what do companies and what do governments now need to do to make it a little bit more equal?
Yeah, so happy International Women's Day, Francine. And I love that you've got an all-women lineup today. I think that's brilliant, because if you can't see it, you can't be it. And you're right that the pandemic has really impacted women in a disproportionate manner. We run a survey every 6 months where, in partnership with the OECD and the World Bank, and we could really see now the impact of the pandemic on small businesses. In particular, female entrepreneurs. We've seen that they've had more businesses closing, they've seen a greater reduction in sales, and there's a number of different reasons. In part, it's the concentration in the sectors, which have been particularly impacted because of lockdown, but also because we see time and time again from the research how female business leaders are actually saying that household chores are impacting their work. 41% of female business leaders saying that the domestic duties are impacting their work, compared to only 26% of men. And so this is a real issue. And the Rose Review, also out today, said that 3/4 of female business owners found that managing their business in the pandemic really stressful, compared to only 55% of male entrepreneurs. So I think it's a problem. From a company perspective, I think there's a lot that companies can do. At Facebook, one of the things that we've done is set ourselves out a goal. And our goal is that by 2024, half our workforce will be made up of underrepresented people, and women being a large number of those people. And we've been tracking ourselves. We've been looking year on year, publishing every year our annual diversity report across all different aspects of our business, senior leadership, women in tech. And I am very proud of the fact that across every single one of our dimensions, the numbers have moved up, and they're moving up substantially. And that's because we care, that's because we're measuring it, and that's because we believe, as I know so many others do as well, that a diverse business is a better business for all.
Nicola, do you feel like there's enough support from the government actually to do more? Should more companies do what you're trying to do? And does that mean that they need some kind of grants or encouragement or even mandatory, compulsory, putting out of some of the figures out from the government?
So I've never been one for mandates in this area, and I think we can see even with the growth in the UK of women on boards, which has really increased significantly thanks to the work of things like the 30% Club, that we now see that none of the FTSE 350 has all male boards, which is fantastic, and that's been a big change that we've seen. But yeah, I do think that this is something that's incumbent on anybody in a position of leadership, whether it's government, whether it's businesses. But we're also seeing that women themselves are choosing what they want to do. And actually a recent survey said that there's been a big increase in the numbers of women that are starting to set up their own businesses, which is fantastic. And we've seen that on Instagram as well, where since just last November, the number of Instagram business profiles in the UK that mention the word female or woman-owned actually grew by over 40%. So we're seeing women taking this into their own hands as well.
I mean, one of the issues, which is certainly a diversity issue, is some of the racist abuse that actually athletes have to succumb online. What can Facebook and others do about that?
So we're doing a lot about this, and I want to be really clear that there is absolutely no place for racism, for hate speech of any kind on our platforms, and we work hard to get that off our platforms. And you can see, because again, we publish now quarterly our community standards enforcement reports, how we're actually doing against those numbers. And so we are now taking, through the investments that we've made, the billions of dollars of investments in artificial intelligence, in deep machine learning, and also by having over 30,000 content moderators, people that are also reviewing, we're getting this down, but we don't want it. And, we work very closely with organizations around the world, such as in the UK with Kick It Out, to make sure that we can get it off our platforms.
How much more content can you actually police and get off the platform? Are there targets? Can you do more in the next 18 months, or do you feel like you're already doing enough?
No, I don't think we're ever doing enough, and we're always going to be working to make sure that we can take more and more down. But, one of the things that we see is that whilst we want, whilst we have zero tolerance, we're not going to have zero occurrence. But we can also see, and we're starting to report more and more now on prevalence, because you can imagine sometimes from the conversations that you might see in the media that Facebook is awash with racism. That's not the case. If you look at every 10,000 posts, the actual prevalence here is very small, between 6 and 8 posts. Now, that's still not good enough, and we're going to continue through, as I said, continued investment in artificial intelligence to get more and more of it down. And you can see that we're moving in that direction through each time, quarter on quarter, more and more being taken down.
Nicola, do you feel like you should ban political ads in almost every country that you operate in, or is it something that is specific to certain countries where you operate?
No, we've been very clear about political advertising, which we think it's an important part of democracy in countries where it's allowed to have. And so we do have it, we do allow it, but we also put very clear guardrails in place so that people can understand. So, for example, the sorts of things that we do is to put if you're a political organization, you have to register. So that what that means is that if an ad comes from you, then it will say that it comes from X party at the top. But I also want to be very clear that it doesn't mean just because it's a political ad that you can say anything. You absolutely can't. And we have very clear guidelines to say what is and what isn't allowed when it comes to political advertising.
Nicola, how will you respond to the growing popularity of TikTok or even Clubhouse?
So I think it's fantastic to see that, the growth of different platforms that we've seen. I've used and tried them both. I think it's important to do that if you work in tech. And I also think it demonstrates the competition that we see every day from a Facebook perspective, which is good for any industry. And it shows that actually this is an industry where two people with an idea, the cliche, in a garage can get going and can set up a new business, which I think is good and it's healthy for the ecosystem.
Nicola, on International Women's Day, what's the number one piece of advice that you would give a young girl that wants to get into tech?
I would say to them to go for it. And I would also say to the young girls out there, I would definitely say, keep going with the maths, keep going with the STEM subjects, because it really matters. But I would also say that if you didn't do those subjects, then actually there is still a very welcome place for you in the tech industry. It's an exciting, dynamic industry, and there's going to be lots more jobs. We just talked about more competitors coming in. So definitely come, and we're hiring, so give us a call.
All right, Nicola, thank you so much. Nicola Mendelsohn there, Facebook Vice President for EMEA, an important conversation, especially on International Women's Day. Now, coming up, a brewing cybersecurity crisis. The attack on Microsoft's email software is morphing into a global problem as hackers race to infect as many as possible before companies can respond. We'll have, of course, a full roundup of that story shortly, and this is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Monday on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Kathy Wood. 5 p.m. Wall Street time on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Saudi Arabia says one of the most protected oil facilities in the world was attacked yesterday. A drone and missile assault was intercepted, the latest in a spate of attacks claimed by Iran-backed Houthi rebels in Yemen. Crude production appears to be unaffected, but the incident sent prices surging with Brent above $70 a barrel. School students in England are returning to the classroom today, the latest step in the UK's plan to reopen the economy, but it has been partly overshadowed by a clash over the pay of health workers. Prime Minister Boris Johnson's government is suggesting an increase of just 1% after one of the hardest years ever for both doctors and nurses. And want to add another $20 trillion to global GDP? Well, the answer is to fully empower women. Bloomberg Economics has estimated the boost to the economy over the next 3 decades if women's education and employment were to converge with that of men. Well, in India, for example, the boost to GDP would be above 30%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I actually read that full report from Bloomberg Economics saying that it would add some, 20 trillion to the economy in 2050. I mean, it's wild. So I urge everyone to read it. And it's basically if you really get convergence between men and women across the world by 2050. Now, this is what NASDAQ futures are doing. They're dropping some 2%. Again, worries about inflation, maybe because of the stimulus package, and that's eating to some of the technology valuations. Smart Conversations continue on Bloomberg Surveillance, the early edition.
We're in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Tech leads the risk-off retreat. Nasdaq futures slump as Microsoft blames China for the latest attack on its email software. A drone attack on the world's largest crude terminal sends Brent oil briefly above $71 a barrel. Saudi Arabia says output was unaffected. Plus, technology, finance, and government on International Women's Day. Up next, Deutsche Bank's Tina Lee and then Conservative MP Gillian Keegan. Well, good morning, everyone. I'm Francine Lacqua here in London, and this is Bloomberg Surveillance, the early edition. So it's International Women's Day today, and looking at gender parity in financial institutions around the world, we have a long way to go. Fewer than 1% of leading global financial institutions have achieved gender balance. That's according to a new report out today by OMFIF, the Official Monetary and Financial Institutions Forum. Now, for the first time, the Gender Balance Index includes commercial banks, that along with central banks, sovereign funds, and public pension funds. Well, joining us now is Tina Lee, Deutsche Bank Chief Executive for the UK and Ireland. Tina, as always, thank you so much for giving us a little bit of your precious time. When we start with gender balance in the financial world, what are some of the policies that you are putting in place, but also that you need from the government to put in place to make this a more gender balanced world?
So good morning, Francine. Well, clearly this is a long journey, and I think that, over the last 5-10 years, I think we have made tremendous progress. I think on one side, there is the whole topic around quotas and targets that the banks need to reach. And certainly for a German bank, we do sign up to the DAX 30 quotas at the very top of the house. But really, for me, it is around how do we achieve gender balance throughout the entire organisation. So whilst it's really important to have senior leaders and have the right gender balance both at the management board and at the supervisory board, what's also important to me is what happens at the entry level. So whether you're talking summer interns or whether you're talking the grad intake, and also really being very specific around the roles where actually gender balance needs more work. So I was hearing you talk to Nicola a little bit earlier, and for example, in our tech space, where the undergrad cohort for women, it's about 19%. So we've really focused on that at Deutsche Bank. So when we have entry into our technology area for women that have software development skills or engineering skills, we've actually managed to improve the gender balance up to 26%. So this is very much a year-on-year challenge, but one that we're very, very focused on.
Tina, I know you've had a very busy 12 months, figuring out if people can work from home, have to return to the office. You've also moved assets because of Brexit. When you look at some of the challenges ahead, are there any more assets that will need to move to Europe?
So, as you know, over the last 3 years, we've been planning for the 31st of December. So we moved all the assets that we needed to. Clearly, I think at this point, there's still more work to do, but certainly we're very comfortable with the progress that we've made.
And what about people? How much have you shifted so far, and how much are you expecting to move overall?
Yes, so we've moved about in the low hundreds. And many of those individuals were individuals that needed to move because they were covering EEA clients. But as you know, we have a considerable presence here in the UK. We have about 8,000 people here in London and in Birmingham. So, in terms of having a presence here in London, it's always going to be significant. So I think we need to see what happens, particularly in terms of the ongoing negotiations between the UK and the EU with regard to actually where the financial services relationship ultimately lands. But certainly at this point, we're very comfortable with the progress that we've made, both in terms of moving assets and in terms of moving people.
Tina, how much has the City of London changed because of Brexit? So not because of the pandemic, which, we're here in the City of London, it's pretty empty still at the moment, but how will it change because of Brexit?
So I think it's quite difficult to tell, if I'm honest. I mean, it's probably the question that I get asked more than anything. And I mean, the way that I view it is the City of London continues to have innate advantages that simply do not disappear overnight. So if I think about the professional services clusters that are here, the sheer depth of talent that we have in the City of London and in London more broadly isn't really replicable in fragmented European centres, and certainly not overnight. So if I sort of think about the history of the City of London, it's reinvented itself time and time again. And I'm very confident that it will do so again. I mean, for me, I sort of think about, some of the really exciting areas where there's everything to play for. So whether it be sustainability and green finance, or whether it be supporting fast-growing companies like the UK fintech sector. So I think there's lots of opportunity here. And for me, what I really look forward to is really a level setting of the relationship between the UK and the EU to make sure that financial services is actually beneficial to both parties.
Tina Lee, when you look at how many people you have working from home, can you give us an idea of that number and how many you're expecting to bring back into the office?
So that's a really good question. So we continue to have about 95% of our people working from home. And if I sort of think about lockdown and I think about really what our people are saying is, for us to go back and have every single individual coming into the office 5 days a week feels to me a little bit like a wasted opportunity. So, whilst we have had a core number of people that have been coming in throughout the entire pandemic because it was not possible for them to do their jobs from home, so particularly on our trading side and in terms of our tech space, there's also great numbers of people for whom actually a more flexible working pattern actually is something that they welcome. So whether it be at the beginning of the pandemic or actually most recently, the feedback that we've had from our people actually tells us that they want to work at least 1 to 3 days from home at some point in the future. So that doesn't mean for everybody, but certainly I think that is something which we'll be looking to explore in the coming months and years.
Is it easier to do in the UK because the pace of vaccination is so much faster than countries such as France and Germany?
I think certainly it is a factor. We have continued to have, certainly since the beginning of this year, on-site testing for the people that have been coming in. But certainly I think vaccination and the fact that that the government has said that all adults are going to be vaccinated by July, I think certainly puts the UK in a good position, not only for financial services and Deutsche Bank in terms of returning to work, but the economy more broadly.
Given all the problems that there have been at Greensill, is there anything that concerns you? Is it a systemic concern for some banks?
So I think it's too early to say. I mean, for Deutsche Bank, we don't have direct exposure to Greensill, but it's clearly a massive story. So it's one that we're continuing to monitor very closely. Is it systemic? Certainly there's no indications that it is at this point, but I think we'll have to wait and see.
Thank you so much for joining us. Tina Lee, Deutsche Bank Chief Executive Officer for the UK and Ireland, for an important conversation on women in finance, but also finance in general. Now, today the market is moving. We look at 10-year yields. There's also a little bit of a correction underway, which is linked to what bonds are doing in NASDAQ futures, down some 2%. Overall, the story, of course, is dependent on what happens with the Biden relief bill, which seems to be going on track. The NASDAQ futures dropping some 2%. European shares, though, are still gaining. Again, rising bond yields continue to dominate investor attention and seem to be fanning concerns about lofty tech valuations. If you look at the global picture in equities, it's pretty much mixed. And then Brent crude topping $70 a barrel. In Shanghai, you can see the CSC actually down some 2.3%. Now, coming up, Britain takes its first step out of lockdown. We speak to Gillian Keegan, UK Conservative MP and Education Minister, as schools reopen in England. This is Bloomberg.
Today on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Cathie Wood. 5 p.m. Wall Street time on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day. This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's get straight to Danny Berger because stocks, everything's actually on the move, Danny.
And as you were saying just before the break, it is all about that 10-year move, now at 1.6%. But really one of the big pain points we see is in the NASDAQ 100 futures, down almost 2%. Yesterday, Friday, rather, our last trading day, we did see dip buyers eventually emerge when we looked at this kind of picture. Francine, they are nowhere to be found yet, whether it's the NASDAQ selling off or some dollar strength, for example, all that reacting off the back of higher yields. Can these valuations continue to hold up? Well, we're certainly getting close to a correction now. But I want to show you just how much sentiment has turned in the bond market. One of the really remarkable charts we've seen is this one. Now, this tracks CFTC positioning for U.S. Treasuries across the entire curve. And if you look at what happened last week, people fled to dump their positioning and move to short positioning by the most on record. Now, the aggregate short positioning, we're not yet at an extreme, but it is moving there, and sentiment is turning quickly, affecting really just the entirety of markets at this point, Francine.
Danny, thanks so much. We'll, of course, keep a very, very close eye on everything that's going on the markets. Now let's get straight to your Bloomberg Business Flash with Leanne Gerrans. Hi, Leanne.
Hi, Francine. Food delivery firm Deliveroo is kicking off its London IPO. That could put the UK market on track for its best ever first quarter. The startup hasn't provided plans on the size of the share offering, but it was valued at more than $7 billion in its last funding round. It plans to list with dual-class share structure that will make it ineligible for the FTSE 100 despite its expected size. The chairman of Greensill Capital and two other board members have resigned as the trade finance company fights for survival. The firm is teetering on the brink of insolvency and is facing a criminal probe of its German banking unit. No comment on the latest departures from Greensill. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Britain takes its first step out of lockdown as school pupils in England return to classrooms today. Boris Johnson is facing a clash, though, over health workers' pay. This comes after the government suggested a raise of just 1%, which sparked fury amongst health unions. Well, joining us now is Gillian Keegan, UK Conservative MP and Parliamentary Undersecretary for State for Apprenticeship and Skills. She was also a member of the Board of Governors of Western Sussex Hospital's NHS Foundation Trust from 2015 to 2017. So thank you so much, Minister, for joining us on International Women's Day. Of course, a lot of the focus is on women being able to pay more, to have affordable childcare and all of that. Will the government have to come back and actually pay NHS staff more than that 1% increase just for a level playing field?
Well, I think, first of all, let's just say we all recognise the NHS and social care workers have just done the most amazing job throughout the pandemic. They've been on the front line and they've been remarkable, and we all are truly grateful. In terms of making, the decision, I think there's a couple of things to say. The first is, it's not just 1%. There are other things that are in place as well. So we've already put in place pay rises for nurses, for example, in the early entry phases, so they're up 12%. There's progression pay within the NHS, so every couple of years there's progression pay within bands. But we have to be mindful of the backdrop against which we're actually putting forward this proposal to the independent body. And that is, obviously we've got 700,000 people who've lost their jobs during the pandemic. Obviously GDP is down 10%. And, clearly we're spending more and borrowing more than we ever have in peacetime. So, we have a public sector pay freeze. We've made an exemption for the NHS. But it's difficult. There's 1.3 million people work in the NHS. So, 1% doesn't sound like a lot, but it's over a lot of people. It is a lot. So, and of course there are other pay, increases that are already baked into the system. So, we've put this forward. We've made a recommendation. The independent pay review body will look at that, and they'll come out with something that they will recommend, and then obviously we'll honour that.
What policies do you think the UK government needs to be putting in place now to make sure that women go back into the workforce?
Well, we've put lots of policies. I mean, childcare has obviously been a massive change, introducing 30-hour childcare. We've put £1 billion investment into sort of flexible, sort of after-school, before-school childcare. That's been a big thing. But I think now the revolution that we're going to see in flexible working is going to be great for women, and really to, just that economic empowerment for countries, actually, when you've got all the most talented people being able to work, in a flexible way, is going to be absolutely amazing. And I think the pandemic, there's very few positive things to come out of the pandemic, but I think that shift in the way people work is going to make it a lot easier for people to balance work and their family lives and be able to enter the workplace. I'm very excited by it.
Is there a danger that actually the UK has exacerbated this gender imbalances because schools were closed for so much longer compared to some of the European peers?
I mean, I don't think so. Obviously, the parents have had, had to do a remarkable job twice during the lockdown in terms of homeschooling. But, that's been quite equally shared, because 40% of the UK working population has been working from home, and that'll be men and women. So I think actually most people have a new found regard, if they didn't already, for teachers, and also for trying to balance and juggle those kids and working at the same time. A lot of people have had a lot of that in the last couple of months. But the kids are back at school today. We've got them all back. Everybody's very excited. Obviously, we're going to be ramping that up over the week. There's a huge logistical exercise with the testing, but I think we'll bounce back pretty quickly from that, and people are still going to be working from home for a little while longer.
Yeah, and certainly a lot of parents will be delighted that their kids are back at school today. What kind of proposals is the government now looking at to extend the term into the summer holidays, or try and catch up some of the lessons lost?
Well, first of all, we've put a £1 billion package into just immediately to put one-to-one tutoring in place, small group tutoring in place. So schools are doing that right now. And that will be rolling out. And then we've got Sir Kevin Collins, who's a commissioner that's been appointed to look at what other things we want to do. We recognise that this is going to be a couple of years. It's going to be a 2 to 3 year journey to help make up for this lost time and to help people to catch up with the curriculum, etc. And he'll be looking at all kinds of options, and he'll come back and let us know what ones will work. The most important thing is whatever we put in place, it works for the children and for the young people involved. There's no point putting something in place that they don't partake of. So we've got to make sure we get it right.
Thank you so much for joining us today. UK Conservative MP and Parliamentary Undersecretary for State for Apprenticeship and Skills, Gillian Keegan. Now, coming up, a brewing cybersecurity crisis. The attack on Microsoft's email software now seems to be morphing into a global problem as hackers race to infect as many as possible before companies can respond. We'll get the latest next. We also look at the markets with the NASDAQ futures down some 2%. This, of course, all goes back to what bonds are doing. So we'll have a full roundup of the markets shortly. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Microsoft is at the epicenter of an emerging global cybersecurity crisis. An attack on the company's widely used business email software is said to have hit at least 60,000 people globally. Now, Microsoft says cyber assault began with a Chinese government-backed hacking group. The European Banking Authority is one of the latest victims. It admitted on Sunday that access to personal data held through emails may have been compromised. Well, joining us now is Bloomberg's cybersecurity reporter, Jamie Terabay. Jamie, 60,000 victims so far. How is this news actually being received?
Well, it was very interesting to sort of watch this wave of just the ripple effect of the news coming out of the US and really just sort of going across the entire planet. As you know, yesterday, the European Banking Authority came out in Australia and New Zealand and parts of Asia. There was a real scramble among IT networks and IT chiefs to really just sort of hurry to patch up their systems and seal off the vulnerabilities before hackers could kind of come in and install their own software that would give them access at a later time. You know, in the US, the victims were small, medium enterprises, universities, and we saw a lot of evidence that the similar sort of targets were the same in Australia, New Zealand, and other parts of the region as well. You know, there were people. There weren't so many breaches per se, but there were compromises in terms of the security. So what you did hear was a lot of messaging to IT chiefs to just patch. You know, the majority of the people that were impacted, you know, they weren't. There was questions really about why, you know, such a wide net was cast for targets that didn't appear to be particularly valuable. So we're still in the watching to see what's happening. A lot of companies are holding this very closely, and they're really just sort of scrambling to seal up all of those vulnerabilities right now.
Microsoft is blaming Chinese government-backed hackers for the attack. Have we heard from Beijing?
We originally heard from Beijing last week, and they really sort of came out and said that anything that Microsoft is saying, that any of their conclusions should be based on complete evidence. And it was a few days later, really, Microsoft came out and sort of was really very detailed and definitive about the group that they call Hafnium, which they say is, you know, backed by the Chinese government. The Chinese Foreign Ministry came back again and pushed back, and they said that China firmly opposes and combats cyber attacks and cyber theft in all forms. And they also said that this was a highly sensitive political issue to blame on a particular nation. So they're not giving any ground there, but neither is Microsoft, it seems.
Thank you so much, Bloomberg cybersecurity reporter Jamie Tarabay joining us this morning. Now, markets are on the move. They're rarely not on the move these days, but certainly it's the U.S. 10-year yield that's impacting some of the lofty valuations maybe that we're seeing, for example, in technology stocks, including NASDAQ. The other thing we're watching is Brent above $70 a barrel. This is after Saudi Arabia said some of the world's most protected oil infrastructure came under a missile and drone attack. That was yesterday. So we'll look at markets. We'll also look at some of the top gender equality stories because it is International Women's Day. Well, Bloomberg Surveillance Early Edition continues in the next hour, and Kaylee Lyons joins me from New York. This is Bloomberg.
This capture can be integrated into games, teleconferencing applications, education platforms that are built with the standard 3D content creation software.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance Early Edition, weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Transparency is not a buzzword. It doesn't sound terribly exciting, but it's actually quite fundamental.
A lot of companies pursuing their first listing, they look around and they concluded that Hong Kong is a viable market.
With the pandemic, this has become more like a tsunami of debt that is facing many countries.
This is Bloomberg Surveillance Early Edition with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, good morning, everyone from London and New York on this Monday, the 8th of March, International Women's Day. I'm Francine Lacqua in London, Kaylee Lyons in New York. Matt Miller off today. Kaylee, I can't believe it's the man that takes a day off, although it's not his fault, because actually Germany, it's a public holiday for Germans on International Women's Day.
Yeah, I think the UK and the US need to follow suit, Francine, so we can take the day off as well, although I am happy to be here with you hosting the show on International Women's Day, and also, maybe more importantly, Francine, back to school for kids in the UK Day. I know you've been waiting for this for a very long time.
I think a lot of working mothers have been waiting for this for a very long time, and that would probably actually go a long way in terms of gender equality. Kaylee, I need to also ask you about Harry and Meghan, the interview, which we haven't seen in the UK. I'm sure the royal family were probably watched it somehow on a satellite, but it's been aired in the US.
It has, but prime time is unfortunately after my bedtime, Francine. I'm up pretty early in the morning to be on air with you at 5 a.m. Eastern time, so I haven't seen it yet, but I really look forward to watching it because I am a royal family fanatic, I must admit.
I mean, I love that. Your prime time is bedtime. Kaylee, we'll watch it together this evening. A lot going on in the markets. What are you seeing?
Well, it depends on what side of the Atlantic you are on this morning, Francine. Over where you are in Europe, things are actually looking pretty good. Stocks are in the green, but here in the U.S., we look set for more pain come the opening bell in about 4.5 hours' time, particularly, again, when it comes to big tech. NASDAQ 100 futures down about 1.8%. Yes, that is off session lows, but still would be a deep loss come the opening bell. It really is that higher yield story continuing to weigh on some of those richly valued names, and yields are indeed moving higher. The 10-year at 1.6% once again this morning. That really is an inflation growth narrative, and feeding into that inflation story is also the commodity complex and higher oil prices. Brent crude topped $70 a barrel earlier. It's just below that now, but it is all about geopolitical tensions in the Middle East with a key Saudi output infrastructure being targeted by drone and missile strikes over the weekend. Now, as for some stocks on the move, it again is that theme of big tech pain. Tesla down more than 5% in pre-market trading as those momentum trades continue to unwind. Tesla, of course, is the largest holding in the ARK Innovation ETF, already down 25% from its peak. It's lower by another 5% or so in pre-market trading. And Microsoft also down about 2%. Part of that is a big tech broad sell-off story, but the other part is a cyber attack the company is blaming on China, but has affected thousands of companies worldwide. So we will continue to keep an eye on that story throughout the day. But as for what else is on deck this morning, let's get you your morning brief at 10 a.m. Eastern time. Some economic data. U.S. wholesale inventories expected to have risen about 1.3% in the month of January. China's National People's Congress continues today and throughout the week. It runs through Thursday. And of course, as part of our International Women's Day program, Francine, we have a ton of great guests lined up on Bloomberg Television throughout the day. But at 5 p.m. Eastern time, Kathy Wood, the CEO of ARK Investment Management, you can bet that Emily Chang is going to be asking her about that decline we've seen in the ARK Innovation ETF, Francine.
Yeah, Kaylee, there's so much going on. Also, Andrew Bailey just started speaking, saying it's his first day back into the office this year at the Bank of England, just across the road from Bloomberg LP headquarters in London. And of course, we'll watch a lot more about what's happening with the NASDAQ futures, down 2%. This, again, is maybe a little bit of repricing with inflation concerns because of the stimulus. So let's talk about inflation. Let's talk about the 10-year bond yield. And of course, let's talk about the NASDAQ this morning with Wei Li, Global Chief Investment Strategist at BlackRock Investment Institute. Also just freshly promoted. So Wei Li, congratulations, especially on International Women's Day. It's nice to recognize smart women who are rising up the ladder. When you look, Wei Li, at some of the concerns on bonds and the 10-year yield, first of all, should we be more worried that the stimulus in the U.S. is not that targeted, and so it will lead to inflation further down the line?
Thanks for having me, and very happy to be part of the dream team on International Women's Day. So, Francine, you talked about kind of bond yield backing up and how what that could mean for risk sentiment and what that could mean kind of in terms of it reflecting inflation expectation. I would just observe that the yields are backing up, more recently led by real yields, are very much reflecting more robust expectation for growth to come through as well. So in a way, it's backing up for the right reason, which we expected kind of coming into this year with the economies reopening and with all the stimulus coming through as well. So I would say that at this level, we are still pro-risk. We have not been concerned, or well, we're paying a lot of attention kind of to the speed of yield backing up, but we're still keeping our pro-risk view because yields are backing up for the right reason. And if you just look at also just the absolute level of where yields are, it's still low in comparison with historical levels, and real yields are still in the negative territory, which we expect them to stay for this year. So for all of these reasons, we're keeping our pro-cyclical view.
So wait, what does it mean for technology stocks? Are we going to see a further correction because of these lofty valuations, or have they corrected enough?
Well, technology names have come under pressure more recently because of their long duration nature, and as a result of that being quite sensitive to kind of the yield movement. But having said that, we do think that the secular driver for technology names in the longer term, they still are holding up, in that if you kind of think about the trend of digitalization, all of that being accelerated by the pandemic trend, by the pandemic, we think that in the structural time horizon, technology names are still reasonably well supported. And if you look at flows, actually, we have seen inflows as tech names sold off, very much going to show that investors are using this correction as an opportunity to add to their technology holding in their broader portfolio. But we do think that it's very important to kind of barbell the tech holding with cyclical exposures in your portfolio. So looking at the likes of small cap, looking at the likes of value, we have become more positive on value. We are overweight in small cap. We also like sectors like industrials and energy, all of that kind of play into the cyclical reopening theme that is very dominant right now. So barbelling is the name of the game, and we see that coming through investor asset allocation trends as well.
But when it comes to your approach for risk assets, you say in your research you think this time is different in that inflation isn't going to weigh on them in the same way. Why is it different?
That's a great observation, Kaylee, in that if you think about kind of past inflationary periods, it tends to weigh on risk assets. But this time round, with the Fed and other central banks becoming more tolerant of inflation overshoot, and also the fact that we do see kind of the yield backing up, not fully reflecting kind of inflation coming through, that is our expectation. As a result of that, we think that markets and risk assets should be able to stomach inflation coming through. And I think one important distinction here is to also kind of look at inflation. We're not forecasting inflation run away in an uncontrollable fashion. We're talking about inflation coming through, still underappreciated by markets, but in a kind of not in a somewhat controllable way, right? So if you think about kind of this year, the inflationary pressure coming from economies reopening and stimulus coming through and pent up kind of the spending. But next year, we're going to talk about kind of the base effect being not as supportive of inflationary pressure. So overall, we're in an environment where kind of the picture is not shaping up for a runaway inflation. And given the broader reopening backdrop, we think that risk assets should stomach that.
Well, and the picture is shaping up differently depending on where you are in the world. Here in the U.S., inflation expectations are far ahead of Europe, for example. So how are you thinking about allocating across regions at this point?
We have an overweight in U.S. equity market. We have had it for a while, and they have been working out quite nicely. We talked about kind of the stimulus support coming through and central bank support as well. But if you look at kind of earnings coming through in the U.S., we're talking about more than 20% year-on-year earnings expectation for S&P 500, and there being room for even that to get upgraded. So all of that, we think that definitely U.S. equities are well supported in this cyclical context. We have recently upgraded our European equities from underweight to neutral. So still not quite overweight, but we recognize that it is important to kind of not be underweight in Europe at a time of cyclical growth rebound. So we like European equities now in the context of this broader kind of reopening, although later than the US, if you think about kind of the slower than expected vaccine progress in Europe. And I think here it's very important to pay attention to kind of the Fed reaction mechanism and also kind of the ECB support, right? So we think that the Fed, like markets were expecting them to do more last week, but they didn't. But frankly, they probably shouldn't because of financial conditions still working okay. But ECB needs to do more. They haven't been buying enough bonds through their PEP. And we expect more.
ECB on Thursday. Thanks so much, Wei Li there, Global Chief Investment Strategist at BlackRock Investment Institute. Now, coming up next, Cecilia Malmström, former EU Commissioner for Trade and candidate for OECD Secretary General. We'll talk about scarring in the economy. We'll talk about inflation. We'll also talk about gender balance. Now, later in the hour, Joyce Chang, JP Morgan Chair of Global Research. That's at 5:30 a.m. in New York, 10:30 a.m. in London. She has some pretty bold calls for treasuries. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Hi. Sure. Yes, I can hear you, but I also...
Welcome back to Bloomberg Surveillance, the early edition. Kaylee and Francine from London and New York. Now, we're just getting some headlines, Kaylee. This is very exciting. On International Women's Day, President Joe Biden targeting gender inequality with a couple of things that he wants to do, including a gender policy council within the White House and a mandate to fight discrimination, boost economic activity. The council will also, we understand, increase healthcare access and advance general equality.
Yeah, and of course, this is the first International Women's Day in which we've had a female vice president in the White House, Francine. So definitely a historic moment on this International Women's Day in particular.
Yeah, and actually, I would point to a couple of research. I mean, Bloomberg Economics has done a fantastic job, Kaylee, looking at, you know, if you achieve real parity between men and women up until 2050, you add some $20 trillion to the economy worldwide or something crazy like that. Now, we'll get back to that, but now the race to lead the OECD has narrowed to just two candidates. So former European Commissioner Cecilia Malmström and former Australian Finance Minister Matthias Cormann are left in the running to replace Secretary General Angel Gurria. If chosen, Malmström would be the first woman to lead the OECD. Well, we're delighted to be joined by Cecilia Malmström, former EU Commissioner for Trade and candidate for OECD Secretary General. Cecilia Malmström, thank you for joining us. When you look at some of these big institutions, be it the WTO or others, including OECD, how do you keep these institutions relevant? What would you change so that people maybe, you know, sit up and take notice a bit more?
Well, hello, it's nice to be with you. Well, I think more than ever today, with the whole world affected by the pandemic, we see how much we need each other. Everybody is affected, and we would need to cooperate to come out of it together. And that's why all the efforts done by national governments, finance ministries, and so on has to be complemented by international cooperation in order to help us restore our economies, to be more resilient when we come out of the other side, to help us prepare for future pandemics or similar catastrophes, and also the big crisis, which is the climate crisis. We need to cooperate much better in order to solve that. So that's really where international institutions have a key role.
Ms. Malmström, do you think the OECD Secretary General should have an unblemished record on climate change?
Absolutely, it should. And it should assist member states now in the recovery to make sure that investments and decisions are climate friendly, that you make the right choices, that it can provide the research, the analysis for member states to have when they do make all these investments and reforms and decisions. And there, OECD doesn't have any money, but it has a lot of good brains, thousands of analysts and researchers who can provide that together with other institutions, of course, and help to prepare for the coming international conference in Glasgow, the follow-up of the Paris conference, in order to see how concretely can you do, not only talk about it, but how can you do it on the ground.
Do you now have the backing from all European countries to be their candidate for OECD?
Well, some countries are not open with how they vote. There are 37 countries in the OECD. I know that I have backing from many European countries, but also from many non-European countries. So we'll see. This week will be determined. On Monday next week, the Council, the ambassadors of OECD, will formally appoint the new Secretary General.
So how do you think the US will vote? Would they prefer a non-European?
I don't know. They haven't been public with their vote. Let's see. You have to ask them. I think whatever. I mean, the OECD is an organization with many Europeans for historical reasons. It was created after the Second World War in order to try to monitor and to assist in the Marshall help. So for historical reasons, it is European dominated. But recently we've had new countries coming in and also it has been expanding. You have Japan, you have South Korea, you have US, Mexico, Canada, New Zealand. Australia, etc., and Costa Rica will join in a couple of weeks. So it's getting more mixed, and it's not about pushing European interests or non-European interests. It's about seeing to the benefit of all member states. And I have quite a lot of experience in working with multilateral organizations and trying to find compromises with different wills and priorities. So I think I can do that.
Is there a danger that if you try to build consensus too much, that you'll be stuck in a rut?
Well, it's a member state-driven organization, so of course member states drive it. And if there is a hiccup or a difficulty, the Secretary General can help to try to facilitate a compromise and then see where is the consensus. How can we work towards a common ground? So that's the role of the Secretary General. But ultimately, it's of course the member states who drive the organization.
Cecilia Malmström, are the digital tax negotiations a make or break moment for the OECD, and where do you see it heading?
I think they are very important, and this is also where the world is looking for OECD to try to conclude these negotiations. They've been going on for many years. It's a task given by G20 countries to OECD, and since a couple of years, there are 140 countries, as well beyond the OECD membership, negotiating to try to find a new architecture for the global taxing when it comes to huge companies. Where do they make the profit? Where do they pay their taxes? And it's quite advanced, the work. And we have been seeing the signals from the new US administration that they really want to work together with others to try to find a solution by the summer or the autumn. So I think it's feasible.
What would you change? Is the deal proposed at the moment just too complex?
It is complex, and it's very technical. So it's done by experts from finance ministries of the 140 countries, and they just had a sort of public consultation to have companies, big and small, and the public opinion, civil society, look at it. And from what I heard, there were lots of proposals coming in that would simplify and make it more sort of easy to grasp. So work is still needed. We're not there yet. But I'm quite optimistic. Mrs. Yellen gave an interview only a couple of days ago saying that the US is looking forward trying to work with its friends and allies to come to a solution. Where exactly we'll land is still too early to say yet, but I think we'll get there.
Okay, you think you will get there. Can you talk to us a little bit about scarring? So if you see the world economy, I mean, we've just gone through a pandemic. A lot of people are still in it, so there are various speeds of vaccinations. Where will we see the most scarring, and how can you readdress some of these balances?
Well, we will see huge scars for a long time, and many people are still in the pandemic. It's not over yet. So we will have to work for a long time to build up. Many companies have gone bankrupt. Many people have lost their jobs. Many countries have put themselves in a big debt trap, and that will take a long time to recover. So of course we must make sure that we get the global wheels rolling, that we get global trade working, rule-based trade. I'm very happy that WTO now has a new Secretary General who can help to modernize that organization. We need to make sure that we assist the small companies who suffered a lot. And today it's Women's Day, and there are so many evidence and research showing that women have suffered much more during this pandemic than men. So there's a lot to do, and that's where OECD cannot solve those problems, but it can contribute and it can assist in the recovery, and hopefully we'll come out better on the other side.
Cecilia Malmström, thank you so much, former EU Commissioner for Trade and, of course, candidate for the OECD Secretary General. Now, a little bit later today, a conversation with Kathy Wood, ARK Investment Management Chief Executive Officer. That's at 5 p.m. in New York, 10 p.m. in London. I know you and I, Kaylee, were talking offline about some of the things that Emily Chang could ask Kathy. I mean, this is probably the interview of the week to trying to really understand what's going on, behind some of the losses that she's seen.
Yeah, and those losses continuing this morning, Francine. The ARK Innovation ETF, her flagship fund, down 4% in pre-market trading. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Monday on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Cathie Wood. 5 p.m. Wall Street time on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London. Matt Miller has the day off today. Now let's get your first word news. Democratic lawmakers predict that President Biden's $1.9 trillion stimulus bill will sail through the House tomorrow. The Senate made changes to the bill to appease moderates and comply with parliamentary rules, but they're unlikely to prove enough to make progressive Democrats vote against the measure. Oil prices surging today after a key Saudi Arabian oil facility came under missile and drone attack. Iranian-backed rebels in Yemen claimed responsibility. Oil output appeared to be unaffected. Still, they are the most serious attacks against Saudi oil installations in almost a year and a half. Those attacks in 2019, also claimed by rebel forces in Yemen, cut production for about a month. And in China, exports surging for the first 2 months of the year. That reflects strong global demand for manufactured goods. The figures were partly skewed by a low base last year when the economy was in lockdown. Exports jumped almost 61% in dollar terms. A lot going on in the world, Francine.
Yes, really a lot going on. Coming up to unpack everything's good that's going on, we'll have Joyce Chang, JP Morgan Chair of Global Research. This is Bloomberg.
the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, or trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, this is Bloomberg Surveillance, the early edition, and here are some of our top stories. A drone attack on the world's largest crude terminal sends Brent oil briefly above $71 a barrel. Saudi Arabia says output was unaffected. Rising yields look set to sink tech stocks again. They also temper optimism over the $1.9 trillion U.S. stimulus plan, which passed the Senate this weekend. Plus, technology, finance, and government on International Women's Day. We bring you an interview with JP Morgan's Joyce Chang. Well, good morning, everyone from London and New York. I'm Francine Lacqua with Kaylee Lyons. Matt Miller taking a day off because it is actually given as a bank holiday in Germany. Kaylee, a lot of the focus is, of course, on what's happening with Brent crude, but also technology stocks and the fact that yields are still moving some of these lofty valuations.
Yeah, it's really just a continuation of what we've seen over the past several weeks, Francine. Tech just cannot seem to catch a break as yields move higher and higher. And of course, I would expect that the $1.9 trillion in stimulus spending that looks set to sail through the House later on this week is just going to continue to feed into that higher yield narrative.
Yeah, and I think the concern, or concerns in certain parts of the market, is actually because that relief bill is not targeted enough, and it could lead to inflation longer down the road. A lot of people are pushing back against that. And of course, kids are back at school in the UK. If you're watching this and your kids are in primary, secondary school, and you forgot to send them, that's no good. Kaylee, what are we looking at the markets?
Something tells me you didn't forget to send your kids to school.
I did not forget.
Francine. Yeah, you've been looking forward to this for a while. In the markets, not as great of a day as Francine is having. We are looking at a red open in about 4 hours' time when the opening bell rings in the U.S. NASDAQ 100 futures pointing to an open lower to the tune of about 1.8%. Big tech, once again, as Francine and I were just discussing, looking to underperform as yields continue to move higher. And that isn't just the story when it comes to nominal yields, but real yields as well. When you strip out inflation, they also are on the move, up another 2 basis points on the 10-year real yield, now just around negative 65 basis points. Yes, still negative, but the velocity of the move is what is concerning to the market. As far as Brent crude goes, now down about 0.3% after breaching $71 a barrel earlier. Maybe the fact that output was not affected at that Saudi oil infrastructure attack has a little something to do with it. It also could be being weighed on by a stronger dollar. The dollar actually stronger for a 4th day in a row. And I want to dig into this a little bit more because this does also have everything to do with higher yields, with higher treasury yields that boost demand for the greenback. And as a result, the dollar has broken out of its long-term downtrend, now actually trading above its 50-day moving average when it comes to the Bloomberg Dollar Spot Index. So the dynamics in the foreign exchange market, something to pay attention to. as well. As for some of the movers on the day, a lot of those momentum trades are continuing to unwind. Open Door actually reported earnings last week. Its first report since it went public through a SPAC in December. It was down 9% on Friday. It's down nearly another 9% in pre-market trading. Plug Power down by 5%. Another SPAC, Churchill Capital, is down by about 6%. And Richard Branson's space exploration company, Virgin Galactic, is now down more than 50% since its peak just last month, down another 3% in pre-market trading, Francine.
Yeah, so some great stocks that you have out there also that really capture also the imagination of space. Now, joining us, Joyce Chang, Chair of Global Research at JP Morgan. Joyce, always great to speak to you, especially on International Women's Day. When you look at some of the repricing that we're seeing in technology stocks, and this is because of, I guess, expectations for higher inflation or certainly a repricing in treasuries, what does it mean for some of the lofty valuations in technologies? Are we going to see much more of a leg down?
Well, look, last year's recession really can be described as a consumer services and labor market slump. So what we really are looking at is that these COVID-19 reopening trades are going to outperform. So we have a constructive stance on the market, Francine, and that's because of the stimulus. You know, look, every $1 trillion of stimulus, we think adds, about $4 to $5 to EPS. So this $1.9 trillion going through really is the story. But we have a clear preference for financials, value, cyclicals, against the tech growth and defenses, just where we are at the stage in the recovery. And in the next couple of quarters, you're going to see some of the best growth numbers that we've seen in 50 years. We're looking at 9.5% growth in the second quarter of the year in the U.S., north of 8% in the third quarter of the year. So, it is a recovery that still has a lot of momentum, and that's going to favor value and cyclicals here.
Joyce, how will central banks actually address the movement in treasury yields?
Well, I think that, it almost feels like with every statement that the Fed is putting out there trying to sort of, outdove each other. We do think you're going to see just continuing concerns about inflation going forward. If you look at this globally, CPI is now tracking 4% annualized gains in the 3 months through February. And, so I think that you're going to continue to see, talk about higher inflation as we see the recovery take hold, higher commodity prices also. And, that the central banks are going to continue, with the same message that we expect an overshoot. This is why we moved to average inflation targeting, that we really have two objectives here. And that is that we get back to full employment, which is something that we see happening sort of into 2022. And we had, good employment numbers that came out, and also not just the full employment, but that, basically that you get to the 2% averaging over a longer period of time. I do think you're going to have talk of tapering, not actual tapering, though, by the middle of the year. So I don't think these concerns are going to go away that easily, but I think the forward guidance, the messaging is going to be very consistent that, we're prepared for this overshoot right now, given where we are in the recovery.
Well, Joyce, of course, we've seen those inflation expectations reflected in the bond market, and the bond market dynamics are starting to have an impact in FX, too, with a stronger dollar. How are you thinking about emerging markets right now with a stronger dollar and also with higher treasury yields?
Look, emerging markets are the most vulnerable, but, the first thing I would say is this is not a repeat of 2013 and the taper tantrum, whether it's for emerging markets or other markets. Before the taper tantrum in 2013, you had technicals in a very different place for emerging markets. You had very, very large inflows to local markets, and we've had FX weakness, throughout this whole pandemic. We haven't had the big inflows into emerging markets, but emerging markets are more impacted, and that is because, EMFX really does end up being the shock absorber for a lot of these countries. So I think that, we don't see a repeat of this Fed taper tantrum, and I don't think that EM assets and fundamentals are as vulnerable in the same way as they were during the Fed taper tantrum because the external imbalances are better. But I think you will continue to see just as we've seen this rotation from more concern about inflation and higher rising bond yields. I mean, I think you will get more talk about what happens if there is a stronger dollar, and that does impact emerging markets more, particularly the emerging markets FX. So we have taken down a lot of exposure there just in our recommendations.
Joyce, thanks so much. Joyce Chang there from JP Morgan stays with us, and we'll talk a lot more about the widening gender gap with Joyce shortly, as COVID-19 has, of course, taken its toll, especially on female participation in labor. Now, coming up later, Abby Joseph-Cohen, Goldman Sachs senior investment strategist. So that conversation at 7 a.m. in New York, 12 p.m. in London, and this is Bloomberg.
Today on Bloomberg, a conversation with ARK Investment CEO, CIO, and founder Cathie Wood. 5 p.m. Wall Street time on Bloomberg Television.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Just like in every sector, I think we need to populate the leadership space with a lot more women.
When you're first, it's very difficult because you carry with you the hopes of so many, the hopes for change and the fears.
Somebody has to make a start and make an impression that gender does not matter at the leadership levels.
Women often are confronted with competing priorities, families and career. At some point, they feel like they need to make a choice.
Women often fall off as they sort of progress the leadership ladder. On various accounts.
There's more attrition at the senior level.
We have a gender impact assessment dashboard, and for the past 12 years, each and every of our major policy has been done to make sure that there is equal pay and equal opportunity.
We can actually be better business partners if we embrace diversity of thought, so people that bring different perspectives.
This is a great moment for men to be real allies and partners, supporting that whenever we see women at the beginning of their careers, helping them find their own strength and voice.
The more women participate, The more economies grow, the better businesses perform. The data is inescapable on that point. Diversity, a diverse team, delivers better results every time.
Well, women leaders, powerhouses around the world on workplace gender equality on this International Women's Day. Now let's go back to Joyce Chang from JP Morgan. And Joyce, I know you've written extensively about this, and actually I also want to congratulate you on this 63-page report about inequality and how COVID-19 has really also accelerated that inequality. When you look at women participating in the labor force in the U.S., how much time do we need to go back to something that's a bit more normal? How will the legacy of the pandemic on scarring in the economy really affect female workers disproportionately?
We have seen women really affected disproportionately because their jobs are concentrated in the services sector, and they also bear the primary responsibility for child care. So, Francine, if we look at the female participation in the labor force, we actually hit a 33-year low in the United States. So we're going back to 1988, and that's after having just years of really, really steady gains that were moving in the right directions. So, we are seeing some bright spots. I mean, if you look at the February labor numbers, you had 355,000 new jobs that were created, mostly in the services sectors. But female participation is very concentrated in retail, leisure, hospitality sectors, and those were disproportionately impacted by COVID-19. Child care was also, another issue for women, and you could really see the numbers change with the school year. So if you take a look at the month of September, for example, 4 times as many women in September of last year left the labor force as men when the school year started. And so I think that's one of the challenges here on how quickly we come back is that, you could have some of these jobs come back, but they're more irregular or part-time. And so you have just this gender gap could continue to widen.
Joyce, this has implications for consumer. Yeah, but this has implications, of course, for consumer behavior, for small businesses, and financial health, as you put in your research. What are the policies that the Biden administration could put in place to put everyone on a bit more of an equal footing?
Well, I think the first thing is that the Biden administration has put a big emphasis on supporting child care. And if you take a look at the U.S. numbers, compared to Europe, Francine, I mean, the U.S. is spending half the amount as, of what Europe is spending. So child care policies, are sort of a first thing, looking at that and really taking in his Build Back Better plan, like a $775 billion, package that takes a look at that. But I think you have, other, that's I think really a key difference between the Europe and the U.S. and a key part of the Biden administration platform. But then you have other things that are just related to, supporting lower segments, as far as the lower income segments of the population that are just very important. And that relates to, the whole range of proposals that deal with, public education. It also deals with a lot of the child care, public education. I'd say even affordable housing really fits into that as well.
Joyce, that's on the government side. On the private side, on the private sector side, when it comes to corporations, we have seen since the pandemic started really this push further toward ESG, investors holding companies to account when it comes to some of these metrics. How much progress have we made to this point, and how much further do we have to go on that front?
There's still a long ways to go. I mean, and I think, the good news is at the public leadership level in the U.S. and in Europe, I mean, you have, many more women who are going into those public leadership positions, whether it is, Kamala Harris having the most diverse cabinet in the U.S. In Europe, you've had, so many leaders that have come up, Christine Lagarde in her position, the appointments at the WTO, the European Commission. So there's public leadership there. But if you look at the private sector numbers, they really haven't moved that much. And just to go through some of these numbers, like in the C-suite, they haven't really moved hardly at all in the past year. You're still at below 5% for female CEOs. Now, women on boards, because of ESG, has continued to make progress, but even that slowed last year. So we went from numbers that were in the mid-teens a couple of years ago to over 20%, and you're still at you're making 1 or 2 percentage point gains because certain states in the U.S. have really made this a priority, like California, and there's more requirements of disclosure and transparency and reporting on that. So women on boards, we've seen progress, but at a slower level. In the C-suite, little change. And if you look at the gender pay gap, which a lot of people really look at as the way to measure, equity, it's really in the U.S. it's stagnated for the last decade. It's at 17.7%. And if you look at a study by the National Bureau of Economic Research, they really raise the possibility that you could widen this pay gap in the U.S. because of this pandemic by as much as another 5 percentage points.
Thank you so much, Joyce Chang, there, Chair of Global Research at JP Morgan. And of course, a massive shout out to all of the economists, whether female or male, doing a lot of research on this, Kaylee. We also have a great Bloomberg economics piece, which really captured my imagination. I mean, they said that, if you have equal female and male participation, and if you really converge the two, you can add $20 trillion to the world economy by 2050.
Yeah, you really just have to support females in order to capture that growth, Francine. And of course, a large part of this conversation that we are having does come to the reopening of schools, with so many women and mothers having had to stay home because of the pandemic with their children not in school. And the UK, of course, reopening their schools today, Francine, so that may help on that front a bit.
Yeah, absolutely. And when you speak to policymakers, it's affordable childcare makes a difference, certainly at women of a certain age. Now, coming up a little bit later today, we'll also hear from the chief executive of Girls Who Invest, Catherine Cullen-Kolscher. That's at 1:30 p.m. in New York, 6:30 p.m. in London. And this is Bloomberg.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
We're in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Well, President Joe Biden is on the cusp of his first legislative win, with the House ready to give final passage to his $1.9 trillion COVID-19 relief plan, the second biggest economic stimulus in U.S. history. Well, to give us a little bit more insight with the latest on the stimulus relief bill is our Bloomberg government congressional reporter, Emily Wilkins. Emily, it will have been a pretty long slog for this to happen, but actually, how much of a win is it for the Biden administration?
So for the Biden administration, this is what they wanted. They wanted this $1.9 trillion bill. They wanted these direct checks to Americans. I think sort of the big components that you saw President Biden go out and push for are going to be included in this bill. I think the question now is sort of what the impact is. Even members of his own party, as well as Republicans, have argued that this much cash going back into the market could lead to higher inflation. The Biden administration has said that they are not concerned that too much is not the problem, too little is the problem. But going forward, this bill is poised to pass the House on Tuesday and then head to President Biden's desk for its signature.
Well, Emily, you're right to point out the inflation concerns. There's also concerns that now that we have nearly $2 trillion in this package, there's not going to be appetite left over to spend more trillions on infrastructure spending. How quickly do you expect the conversation to then turn to that effort?
Oh, it is already turned to that. President Biden met with a bipartisan group of lawmakers last week talking about this infrastructure and transportation package. You know, there is bipartisan support for getting things done on transportation. I think President Biden sort of sees this package as a long-term economic package. You know, this is the one going right now is a bit more short-term focused. The infrastructure one is more about really making sure that the economy gets back and gets up to speed. Of course, there are several big questions relating to union and labor provisions in any such bill, as well as how the bill will be paid for. So it's certainly not a done deal yet, but discussions are already beginning to happen both on Capitol Hill and in the White House.
Emily, what's the main concern? So once this gets passed, is there a concern of how the money gets to the right places? Is it going to be, are there any operational obstacles to how the relief package is then actually used?
There's definitely been criticism in the past for former relief packages about how the funding has gotten out, you know, where the funding has gotten held up. I mean, remember, this is going to states and localities, and so you start to run into different layers of government and bureaucracy, sort of who has control over X or Y or Z. But there's also a sense that a lot of places this aid is needed. It's aid for vaccines, it's aid for state and local governments, and that it'll going out there. I mean, there's no guarantee that it's going to be perfect, but there are definitely individuals who have said that this aid is going to be much needed at this point for helping people who are still struggling with the economic impacts of the coronavirus.
Thank you so much. Our Bloomberg government congressional reporter there, Emily Wilkins. Now, we have a pretty packed day today. This is what else we're watching. Kaylee, I know you're focused, I think, on Microsoft.
I am focused on Microsoft. The shares are lower by about 2% in pre-market trading at this point after a cyber attack that has affected the company's business email software. The company has placed the blame on China for this. And what I find so interesting about this, Francine, is this is only a few months after that SolarWinds cyber attack that rippled across cybersecurity and, of course, was blamed on Russia, and it really speaks to the escalations in geopolitical tensions and how that is impacting the cyberspace specifically.
Yeah, Kaylee, I'm watching oil. I mean, there's a lot of things. It'd be easier to say what we're not watching, but I am watching oil just because of that massive attack on some of the Saudi facilities yesterday. Now, the attacks, I think, were the most serious against Saudi oil installations since a key processing facility and 2 fields came under fire in September 2019. And again, this is just a week after OPEC Plus decided not to do much. So, you know, if you look at what the price of oil has done, it's kind of on the back of what we also saw last week. All right, should we take bets on how Matt Miller is actually celebrating International Women's Day?
I would hope that he's giving his wife a little bit of a break with a baby and taking care of the baby to celebrate International Women's Day. I feel like that would be a good gift for him to give his wife.
Yeah, and I feel like he has. I feel like he's a very involved dad. In fact, we sometimes see the baby on some of our calls in the morning, conference calls, which is always a treat. So happy International Women's Day to everyone across the world. Coming up in the next hour, it's, of course, Bloomberg Simulcast Surveillance. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Rates are going to keep rising until we get that disorderly market functioning.
It's going to be very hard for yields just to sit there and for the market to believe that the Fed isn't going to move sooner.
If the Fed starts talking about tapering their asset purchase program, I think that'll be negative for risk assets.
The market is looking for any positive data in order to continue to justify this march higher.
Half of the market wants to have better job data, and the other half of the market is scared of that because of the potential inflationary consequences.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Big tech struggles from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures down 23 on the S&P. We're off by 1.5%, Tom, on the NASDAQ.
Yeah, you know, they're down. It's on 1.5% of the NASDAQ. It was down worse earlier, John. I look all in all at where we are. And to me, it's a correlated adjustment on a Monday. We get ready for a really interesting, a really nuanced week.
The story, Tom, is pretty simple. Good news is bad news for tech stocks. We had the good news of the payrolls report Friday. And over the weekend, it looks like that $1.9 trillion plan is going through the Senate and next to the House.
Oh, as David Kostin at Goldman Sachs, Gina Martin Adams at Bloomberg say, there will be earnings, there will be revenue growth for those big tech stocks. Maybe that pushes against this downdraft. But again, John, I would look at the correlated effort here off of that jobs report. And John, you've got to look again to oil out to 70 print on Brent. And with that, the yield move we continue to see in the 10-year space.
The outlook gets better and better. And Lisa Abramowitz, the outlook now on our terminal, ECFC, Bloomberg Terminal, 5.5% for 2021. That is the consensus view now of economists on the street.
And the question is whether the consensus view of the Federal Reserve that this inflation expectation, this increase in growth is transitory, or whether it's the beginning of something more lasting. And that is really going to be the key debate, John. Is this inflation driven? Is this a normalization that has a natural cap? Or is this just basically a head fake before the natural low inflation, low growth world returns?
Is the plan too big? Here's the price action this Monday morning. Good morning to you all worldwide. We look like this on the S&P 500. Futures down 21. We're down a little more than 0.5%. In the bond market, yields bleeding higher. 162 on Friday, through 160 a little bit earlier this morning. Where are we right now? 1.6%. Yields up 3 basis points. Later into the FX markets, some dollar strength for you through G10, through the whole of G10, through much of this morning. Euro dollar now down to a 118 handle. We bleed lower by 1/3 of 1%. The euro, Elisa, 118.78.
Yeah, that dollar
dollar strength really coming at a not great time for a number of assets, whether it's the commodities bet or whether it's this idea of the reflation narrative in the emerging markets complex. I'm curious to hear what Janet Yellen has to say about this. She's speaking today at an IMF event at 10 a.m. She's a U.S. Treasury Secretary. Also interesting to see how much he's going to push back against the sort of renewed inflation push idea that seems to be gaining hold in markets. Then later today, President Biden is going to be signing an executive order creating a new Gender Equality Council. This is a fascinating event on an International Women's Day, to me, because of the pandemic and how much it affected women disproportionately, particularly due, I will say, to childcare issues and the fact that a lot of women at home found it very difficult when they were trying to feed their kids and distract their kids from online learning, from actually giving them something to do. And then today, the House will be voting on laying out the guidelines to pass that $1.9 trillion stimulus that was revised, passed by the Senate over the weekend. And they're laying it out to pass tomorrow. John, the key will be looking for some sort of consensus within the Democratic Party to push forward that infrastructure spending and some of the other plans that Joe Biden has.
We could see some really powerful data points in the coming weeks and months, yes. Tom. Texas reopening, you throw on top this $1.9 trillion plan.
Right.
That data could be big.
What's so important here, and first of all, let's do the economics first, John. We do both on surveillance. Sri Kumar with a really terse, important note over the night. Sri Kumar, Global Economics, making very clear that this stimulus is totally different in its impact on American society than the many efforts we've seen since 2008. This is a stimulus that will move money to lesser wealthy people. They will spend the money. The other idea, John, and this is an immovable force, is Joe Manchin of West Virginia. Boy, did we learn his power. Trump took West Virginia 69% to 30%. Let's not forget that.
Tom, small margins, big consequences. Georgia, 2 seats, the difference between a $1.9 trillion plan and something that otherwise would have been a whole lot smaller.
And Joe Weisenthal leads with that in his market note this morning, John.
Let's get to the markets this morning. NASDAQ futures down 188. We're off by 1.5%. Amy Wu Silverman joins us now, RBC Capital Markets equity derivatives strategist. Amy, great to catch up. You've noted that correlation between Tesla and the S&P 500. How important is that correlation right now, Amy?
You know, it's funny, it used to not be as important, but now that Tesla is a pretty large weight in the S&P along with the rest of FANGMAN, you know, we now call it FANGMAN plus Tesla. And, you know, they're 50% of the Qs and they're 25% of the S&P. So on days like today, they continue to weigh on the indices. And then the one other thing you don't have is all the call buying love that you had back in August of 2020 and the beginning of 2021. That's dropped like a stone in Tesla and a lot of the mega cap tech names, and you don't see that retail fervor there as you did before. Now, the only positive catalyst they can give you is there's going to be more stimulus checks on the way, what Wall Street Bets likes to call their stimmies. So, you know, we'll see if that changes anything as we go forward.
Amy, good morning. Tom Keene in New York. I really want to talk about the derivative space here. You go right to the skew, the twist, if you will, that's out in the derivative space. It's a Monday. We do talk skew on Monday. Tell us about skew and what it means for those that want to buy the dip.
Yeah, you know, what it is telling you right now is that call skew, so those call options relative to those put options, in particular in mega cap tech and all those names that have not done well, are really at their most attractive point ever. And, you know, obviously GameStop is in the headlines and Rocket and these other meme stocks would have you thinking that people are continuing to call buy. But if you actually look at the call volume statistics, they've dropped like a stone. So we've really come down since the beginning of 2021 when skew was inverted. So that call wing was so bid up from the fervor of both retail and institutional. So essentially, if you want to express that positive upside still in your previously loved momentum / mega cap tech names, it's an awfully good time to do it relative to that before.
Wait, Amy, are you saying that you think meme stocks are a buy?
No, I was saying that if you look just to the meme stocks like GameStop and Rocket, you would think that call skew is expensive. However, in call skew in the mega cap tech names, so like FANGMAN and Tesla, those call skews have actually come in a lot. relative to, what happens to be in focus in the headlines. Those call skews are actually at one-year lows, and it's actually the put wing that's extremely expensive. And so, if you believe there is any turn back to the more mega cap tech names driven by stimulus, driven by retail fervor, returning to that side, then that call wing is very inexpensive right now.
Amy, can you speak to the outside influence that retail is having through short-dated call option buying? The conversation we're having right now, to me, is absolutely remarkable. We're talking about stimulus checks potentially going into the market through short-dated call options, which are going to drive trillion-dollar companies on the S&P 500 and the NASDAQ. Amy, this is new, isn't it?
I know. And every time I say it, I find it very strange that I'm saying it. But the reality is, if you look at the correlation between, I appreciate it's only 2 rounds of data points, but there is a very strong correlation between the last 2 rounds of stimulus checks and the inversion you're seeing in, Fangman plus Tesla or mega cap tech, whatever you want to bucket it. Now, obviously, there's an institutional side to that too, but there is no doubt at this point in the data that the small lot contracts, so we call it, under 10 lots of options, those volumes went to levels we just simply have never seen before, just never seen before. And that, that is related to people getting $1,400 in checks. It is like that's happened very strongly. And when you look at those forums, they have jargon for it about what they plan on doing with those checks. And then, my question is, do they go back to kind of the beloved names like Tesla, which obviously has had a downdraft, or do they go to more consumer discretionary, Norwegian Airlines or United Airlines? And, they're very aware that there's a style rotation. And so to me, that's a very open question, because that can move the market there.
Amy, just take a note. When John says this is new, isn't it? What he really means is you're nuts. And we'll go on from there. Amy, what is the market call then that you have at RBC? How does it dovetail into all the other work RBC Capital Markets is doing?
Yeah, so, I think you guys know Lori Calvasine and Tom Porcelli quite well. Right now, Lori's focus is on financials and the overweight there. And one thing, that I would add on from the derivatives side is, when you look at the financials, the one thing that has changed from the options market is basically the fact that buybacks are allowed again. There was a ban that essentially has been relieved. Now, what that does is it goes back to skew. So if you think about the fact that buybacks exist, that essentially puts a put on the market, right? That there's a dampening effect on the downside when you know the companies can buy their stock back. And what that does is it keeps whittling that downside skew further and further. So structurally, we like trades in financials where you're selling puts to fund upside, where we think there continues to be a long way to go, because we think that put sale is far more comfortable when we know those buybacks are in place to continue to backstop those shares.
Amy, I don't think you're nuts. Just to clear it up, Amy Will Silverman on this International Women's Day. It's great to catch up with you. Thank you. RBC Capital Markets Equity Derivatives Strategist, and some great work alongside Lori Calvasina over at RBC. Tom, I do think we should step back and really look at what we're talking about here.
You're 100% right, John.
$1,400 stimulus checks. And not my view, the view of people on Wall Street, that this money could go into several names, maybe into the options market, and whip around massive, monster, mega cap tech stocks.
I know that thinking is out there, John. I totally disagree. Or that what you're going to see is consumption. You're going to see an interior confidence in the bottom half of America as they get those checks and those set of repetitive checks. I believe it's out to September 6th after the second Manchin amendment. And John, with that, you're going to see a build out into a better GDP, and it's that GDP which is going to goose those big stocks.
Let's be clear, the relief is needed. Most people agree on that point, Lisa. It's not my view, it's just a view out there. It's a conversation on Wall Street that's happening about where this money could go and what it could mean for this market.
Yeah, but there is a big question of whether these retail investors could have the same effect on Amazon shares, on Oracle shares that they have on GameStop and AMC. Not quite the same kinds of names.
From New York City this morning, good morning. Alongside Tom Keene, Lisa Bravitz, I'm Jonathan Ferro. What a lineup of guests we've got for you. Later on this morning, Abby Joseph Cohen of Goldman Sachs. Looking forward to that. In your equity market right now, down 21 on the S&P. We're negative 0.5%, and bond yields have a lift. Your yields approaching 160 on 10s. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Democratic lawmakers predict that President Biden's $1.9 trillion stimulus bill will sail through the House tomorrow. The Senate made changes to the bill to appease moderates and comply with parliamentary rules, but they're unlikely to prove to make progressive Democrats vote against the measure. And oil prices surged today after a key Saudi Arabian oil facility came under missile and drone attack. Iranian-backed rebels in Yemen claimed responsibility. Oil output appeared to be unaffected. Still, they are the most serious attacks against Saudi oil installations in almost a year and a half. Those attacks back in 2019, also claimed by rebel forces in Yemen, cut production for about a month. In China, exports surged the first 2 months of the year. That reflected strong global demand for manufactured goods. The figures were partly skewed by a low base last year when the economy was in lockdown. Exports jumped almost 61% in dollar terms. And Elon Musk is getting into the Texas power market. He's building a gigantic battery connected to an ailing electric grid outside of Houston that nearly collapsed last month. The move marks Tesla's first major foray into the epicenter of the U.S. energy economy. And Prince Harry and Meghan Markle have given their first side of the rift that's developed in Britain's royal family. In a wide-ranging interview with Oprah Winfrey, they described palace discussions about the color of their son's skin, losing war protection, and the pressures that led the Duchess of Sussex to contemplate suicide. Harry said he felt trapped by royal life and was surprised he was cut off financially. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.